Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Coming out of a midweek holiday, Thursday morning, we are coming to you as always from the CNBC-TV18 Motilal Oswal studios. I am Prashant. With me, my colleagues Nigel and Surabhi is here with us today. Guys, hi, good morning.
Good morning. So coming back after a midweek break, but guys, it wasn't a break without news. There's so much of it, right? From the Federal Reserve to corporate action to regulatory action. Plenty to keep us busy this morning.
That's right. So let's get straight to the action, Prashant.
Well, I think we'll have to start with the Fed, right? And what's happened or what's not happened. So let's just begin by telling you what you need to know. The big headline is that there is no hawkish surprise as far as the US Fed is concerned. And the reason I start by saying that is because at the margin, the fear was that the Fed essentially, because data has been so strong, it's been hot. I mean, the H word will come into the mix, the hike word, right? But nothing. The Fed seemed more inclined and gave enough indications that they want to cut rather than hike. Nothing on hike. Now, Fed Chair Powell made reference to rate cuts, but no openness to hike. I mean, actually, in the Q&A part of the event, after the rate decision statement readout, etc., in the Q&A, many journalists looked like they had come prepared to ask that hike question, and they put it to the Fed chair, but he did not bite. And he kind of stuck to the fact that, the rate cuts perhaps are the more likely path. This is one thing. In the prepared statement, they did remove the explicit guidance towards rate cuts this year. And this is a change. Maybe you can read it as a bit of hawkishness, etc., but that is what has happened. The other bit, of course, is QT, quantitative tightening, right? I mean, the balance sheet runoff was happening at $60-65 billion. Now, that has been cut down, which means at the margin that is dovish. So there is rates, but there is also what they do with the balance sheet. And in the balance sheet, nothing has been done on rates. They've said, and they've maintained that rate cuts perhaps are the more likely first action. But on balance sheet, what they've done is maybe a little more dovish as compared to what was expected. It was not completely unexpected. So it's all good as far as the overnight FOMC action is concerned. US markets last night sold off in the last 30 minutes of trade, and they were down about only 0.33%. But, I mean, you're reacting to 2 days cumulative worth of price action. So S&P was down, over the last two sessions, is down 1.9. That is Tuesday and Wednesday. NASDAQ is down about 2.4% or so. Big swings every day for yields and for the dollar, right? 7-8 basis points higher on Tuesday, 7-8 basis points lower last night. So unchanged. For the 10-year unchanged, for the dollar unchanged as well. So 4.62 on the 10-year, dollar index about 105.7, 105.75 or so in that vicinity. The other thing is the USD JPY, right? The yen has been weakening. It hit 160 and it was about 158. And from 158, it's moved to 154 in a couple of hours. And it's moving wildly, as you can see. We're back at about 156 or so. And there is some hint, there is some talk that the Bank of Japan and the Ministry of Finance in Japan are intervening to stabilize the currency now. Last week, of course, the BOJ was dovish. And that came as a surprise to many. The other big story for us is the massive slide in oil prices. Prices went down 5%. And oil was looking like it was comfortably in an uptrend. It's not as if something dramatic is happening. If you believe that this price rise or there was a geopolitical premium which was built, it's not as if the war has ended or anything. But there's a big slide. And I didn't see any big noteworthy data as well. So we'll see. But this is, if this stays, if it sticks, if it builds on this slide from last night, I think it's going to be a positive for many stocks, many sectors here, which we will talk about. Just where does all of this leave us? Just to tie in the levels here. So on Tuesday, which is the last session, we saw a sharp slide from the highs and starting at about 2:30 p.m. That last 1 hour really changed how the day looked like. I looked at institutional data. There was not very much. FII is bought about 1,000 plus crores in the cash market, and that's the largest number since I think the 10th of April or so. But on the F&O side, it's more pronounced. So on Monday, as of Monday, there were about 1 lakh odd contracts short in index futures. On Tuesday, when we came in, there were about 45,000 contracts short. And they are long now, net long, 16,400 odd contracts as far as the index futures are concerned. So interesting there. Now, the low of 22,385 is the first marker which should not break. If there is any more correction, 22,400 is a line in the sand. The 20-day comes in around there at about 22,443. So these are levels which the market must hold. On the upside, of course, I mean, it's new highs, right? We already took 22,775 out on Tuesday before that sell-off. So upside levels are clear. Bank Nifty nearly hit the 50,000 mark on Tuesday and then had that big dramatic sell-off. So that's, of course, the target on the upside. The 20-day for the Nifty Bank stands at 48,183. We left off at 49,400 or so. I think generally speaking, I mean, the cues are positive, right? The Fed is not hawkish. Oil prices have seen a sharp sell-off, and the dollar has cooled off after sort of getting to about 106.2. We are well under it this morning. So it's not a, I mean, if you get a start, which is about 25, 30 odd points higher, I think there is an opportunity to build on it. You don't want a big gap up opening because that kind of takes this juice out right at the word go. But 27, 30 points, I think you'd be able to see more on the upside with these supports, with these stops in mind. Surabhi.
Yeah, Prashant, absolutely. I mean, I guess the Fed was a bit of a non-event, barring what they said on the balance sheet, that they won't be sort of moving at the same pace as before in terms of unrolling that balance sheet, or basically sort of dialing back a little bit. A lot of the Asian markets are positive this morning. Hong Kong's opened up, with a gain of over 1.5%, 1.25 to be precise. Singapore's positive. So we've got some positive cues coming in from Asia. By the way, we've also made it successfully through 4 months of this calendar year. So congratulations to everybody for that. So just got me thinking. Let's take a look at price action over April. And the divergence between India and the US is very, very pronounced and very clear. Because the US market has faltered. The key indices are down anywhere between 4% to 5%. But the Indian market has taken off. The Nifty, relatively speaking, is at least up just under 1%. But the Bank Nifty, that's been the story of April with that gain of 3.8%. Now, was Tuesday's big volatility on the Bank Nifty an aberration? That's something that we're going to debate and discuss as we go along. But in terms of data points, just to put some more numbers on the table, positive cues this morning. The fall in Brent, which Prashant has mentioned, down 3.5% overnight. The US stockpile buildup is quite a bit. Geopolitical noise is sort of tapering off to some extent. There's a lot of talk about brokering peace on Gaza as well. So that helped oil prices cool off. Another positive macro for us is the GST number. We have crossed 2 lakh crores in GST collections in April. That's a huge jump. I mean, I just put up the last couple of months' data as well for reference because we were clocking 1.6, 1.7 lakh crores per month. Suddenly, it's notched up to over 2 lakh crores. So that's another sort of good point that's coming through. We've got a lot of auto sales numbers. We'll tell you more about it as we go forward. Short point is the picture is very muddled. There's no one clear trend that's playing out. That's the, of course, FII and DII number. Big positive number for Tuesday. But FIIs are still net sellers, 8,600 crores of net sell in April. So let's see if this is the start of a new trend, the FII buying that we got on Tuesday. Very, very important to track. On auto sales, as I was mentioning, Maruti's numbers are sputtering along. The growth was lower than estimates, but TVS has done really well. Hero has done really well. On the CV side, something that I was tracking very closely because, again, a barometer for the economy, the numbers from Tata Motors look very good. The CV sales are up 30%. But, if you look at Eicher, their CV numbers are quite poor, a decline of 18%. So really muddled on auto sales. Just very quickly, the stocks in focus today for me, two sets. On one side, it's going to be Kotak Mahindra Bank and Federal. We all know the news by now. Mr. Manian quitting as joint MD. By the way, Federal Bank is holding a press conference at 2 o'clock. That becomes a really important time that you want to track as well. Let's see what Federal officially has to say on all the buzz around Mr. Manian moving to Federal Bank. And the second, of course, is going to be the Godrej Group because of the family settlement contours now becoming official. Watchpoint is going to be Godrej Properties for me, really, because all the Vikhroli land has moved to Godrej and Boyce, which is the unlisted entity, the other side of the family. And the non-compete says that, they can still compete in real estate. There's no non-compete over there. So, will we have two separate companies on real estate from both sides of the family? So, for me, Godrej Properties is going to be a watch point. Just ending with today's results. Lots of interesting mid-caps in focus. Federal, of course, apart from the big, management issue, there's the result press meet as well. Dabur, Coal India, Blue Star, CEAT. So, lots of interesting numbers to keep us busy.
Well, that's right. On Tuesday, we were seeing that the markets were running away, and then we saw that big intraday drop. In the Nifty Bank, that could be a technical factor that did play out there because you had the Nifty Bank as well as the Nifty Financial Services Index that played out the weekly expiry as well. So that could explain part of the reason because, as you all mentioned, no big scare coming in from the institutions. The FIs, in fact, were buyers out there. So did the markets preempt some kind of negative news on that one-day holiday that we had? Well, if that was the case, then part of the bad news or most of the bad news is in the price. So I would view that positively. The other part that makes me a little bit sketchy is the FI gross long positions are now at 2 lakh contracts. As I mentioned repeatedly, I like some shorts in the system, but now the FIs have got net long. How did that happen? Well, if you look at the addition on Tuesday's trading session, they added longs, they covered shorts. Now they're net long with 52% of their positions on the long side. And look at the swing factor. We were net short on the FIs were net short with 45,000 contracts on the short side. Well, that's turned around and now they are 16,000 net long. So that's a 60,000 contract swing. But this is the net position. I wanted to focus a little bit on the gross long positions. Now, in Tuesday's trading session, they added 47,000 long contracts. That's the highest that I've seen in more than a year. So that's point number one. The second factor is the overall positioning on the gross long side is 2 lakh contracts. I haven't seen that in more than a year. So that's the highest that we've seen in recent terms in terms of the FI gross long positions. What are the supports you're looking at on the Nifty? I think this market is still pretty much in an uptrend. And as I mentioned on Tuesday morning as well, the Nifty is headed to around 23,000. The Nifty Bank is headed to around 50,000 odd. So I think you need to build on to your long positions with the supports that come up for you on the screen. On the Nifty, the 22,200 is important. And on the Nifty Bank, we have the crucial levels on the downside. Two set of stocks I'm tracking. One is the OMCs and IOC in particular. The stock fell off the cliff post the numbers coming in on Tuesday's trading session, but it ended closer around, it's still holding around the 20 and the 50 DMA. So technical levels as well, it's holding around those levels. And I'll watch out for all the OMCs because all of them sold off in Tuesday's trading session, but Brent crude prices are lower. So maybe they're in for a bit of a bounce back. The other stock I'm looking at is MOIL. It's already seen a rally of more than 30% in the last 1 month or so. And now there's news that's come in that they've increased prices by 25 to around 40% odd. We here at CNBC-TV18 had alerted at much lower levels that going by the global supply scenario, because there is a deficit coming in there could be a possible price hike. And that's precisely what's happened. So after it opens up in the green, I'll be interested to see what happens from there.
All right, Nigel, thanks very much. Those are all the cues that we've put out on the table. Plenty to track this morning. Let's get started. And of course, we're going to run you through the equity call of the morning, get you a couple of views that are coming in bright and early. And the call that we've got for you is coming in from CLSA. On equities, Eric Fishwick of CLSA says that the Fed left rates unchanged, which was a given. However, he adds that the Fed did indicate that it will start to moderate the pace of quantitative tightening. He says the FOMC statement explicitly flagged that the improvement in inflation had stalled and that it would take longer for the Fed to feel confident that inflation was on a secure trajectory towards 2%. However, he adds that the Fed did not open the door to the possibility of rates being raised. And this was backed up in Powell's Q&A session. In aggregate, Eric says this was a less hawkish pivot than many in the market expected, and the Treasury curve has shifted downwards in consequence.
Well, let's get you some money market views as well. Parul Mittal Sena of Standard Chartered Bank says that the USD INR had a slow drift higher in the previous week, driven by month-end import demand and FPI outflows. She says FOMC outcome and Powell's press statements were in line with market expectations. She thinks the INR could outperform in the near term, given forex reserves are near all-time highs and positive INR fundamentals. She expects the pair to trade in a range of between 83.25 to 83.75 to the dollar in the week ahead.
Okay, on bonds, Parul says India rates were range-bound during the week due to the lack of domestic triggers. She says Powell indicated that FOMC might hold rates longer than its earlier expectation. However, this was broadly in line with market expectations. She adds that markets will look forward to the US non-farm payrolls data, which comes out on Friday for further cues. She's expecting the 10-year benchmark bond yield to trade in a range of 7.1 to 7.2% in the near term.
Well, we've got a lot of stocks to track for you in our special top 10 segment. So we've narrowed it down to 10, but there are plenty of more stocks. Let's run you through the list. Hero MotoCorp, Cholamandalam, we have Indust, Adani, Wilmar, Havels, India Mart and Festar Business. All of them will be reacting to positive news flow. On the flip side, Kotak Mahindra Bank, Ambuja Cement and Maruti will be under some pressure, so likely to open up in the red.
All right, James Knightley is Chief International Economist at ING. He's joining us now to take some questions. James, good to have you with us here. Thanks very much. In a way, a lot to digest, but little change, right, from what we already know. And it's interesting always how sort of narratives move and then something which would have been considered. So, for example, I mean, so far we were talking about rate cuts getting postponed, and now There was this element of a possibility of a hike. Will they refer to it? That started to creep into the market. And then now overnight, when they did not sort of lean that way at all, it's being seen as a positive. James, so your sense?
Yeah, no, we've seen some interesting moves in financial markets through the afternoon in the United States. Initially, the fact that we didn't see any consideration of the possibility of a rate hike anytime soon. Powell saying that he would need persuasive evidence to justify any action, and that he thinks policy is in a good place. So that provided a lot of relief. That there's no likelihood of a rate hike unless the data comes in even stronger than what we've been seeing. So there's still a bias to ease, but that when the ease is still the question mark. And again, given the data has been so strong, we've seen the past 3 months, inflation's coming at double the rate we need to see. The economy's added over 800,000 jobs in the first 3 months of the year, and the consumer is still spending. So there's little prospect of an imminent rate cut, but that rate hike scenario does appear to have taken off the table.
James, so much can change in a matter of weeks, right? As Prashant mentioned, that we were all talking about whether we're still getting 3 cuts this year or not. So now saying, OK, at least there's no hike. But my question is really that, do you think markets have sufficiently digested this pivot? I mean, the equity markets in the US, for instance, are down about 4.5% in the last 1 month. Bond yields have been very, very range bound. Do you think this is how things will remain for the going couple of months? We're just in a bit of a limbo with respect to monetary policy.
I think it's just purely down to the data now. We know the Fed's position, that they would like to cut if they can cut. And that's the basic narrative I think we've been getting from Jerome Powell and the rest of his team. Now, as I say, we need the data. And it's not just 1 month or 2 months worth of data, to be justifying a rate cut. Well, I think we need to see 3 or 4 months. So that would mean September really is the earliest opportunity for a rate cut. I think we'd need to see at least 3 inflation prints, core inflation prints coming in at 0.2. Remember, we've been coming in at 0.4 for the last 3 months. And I think also we'd need to see a weakening in the labour market as well. The unemployment rate's currently just 3.8%. I think we'd need to see the unemployment rate creeping up above 4, probably towards 4.2%. By September, for them to actually move at that September FOMC meeting. So it is, I think, really down to the data and seeing clear momentum shifts relative to what we've seen in the first 3 months of the year, which has been very, very strong.
Hi, James. Morning. Good to see you in. James, so what are you factoring in then? September is going to be the crucial meet. Do you believe we'll get a couple of rate cuts going by the data that we already have on the table for 2024? And what about 2025? And also in that sort of a backdrop, we are looking inward out here. What does an emerging market central bank like India, what does the RBI do from here on? We'll have to wait to see what the Fed does, I'm guessing.
Yeah, I think, as I mentioned, I think the Fed is inclined to cut if it can. But we need to see the data prints coming through. I think we will. We're looking at a clear divergence between what official activity data is saying and official jobs data is saying and what business surveys are saying. Business surveys are considerably weaker. We're going to get more business survey evidence on the labour market over the next couple of days from the Institute of Supply and Management and the National Federation for Independent Businesses. I think that is still pointing to a clear weakening in the job creation story in the United States. And I think that we will get the unemployment rate ticking higher. The key question is that inflation print. We need to see inflation coming down. Now, we still think 75 basis points is on the table. We're a little bit more aggressive than the market, but not hugely so. But for next year, of course, we've got the election to consider as well, the presidential election. And if we get a President Trump being elected, the dynamics could shift considerably because, of course, he is proposing tax cuts, corporates and potentially households. He's also talking about tariff increases, not just for China, but for India, for the UK, for Germany, for Canada, for everyone. So this is going to be something that really could change the situation. And if we see ongoing large fiscal deficits in an environment where inflationary pressures are building because of tariff hikes. And if we do see tax cuts in the United States that support domestic demand, then that would really change the story on the outlook for the Fed next year quite considerably, because the Fed will be highly unlikely to cut meaningfully if that is the scenario.
Absolutely. And that's an interesting point you put on the table with respect to tariff hikes on sort of guessing what's happening to inflation. But James, on the basics as well, every commodity from cocoa to gold to metals in between, everything has been shooting higher. And these are multi-year highs that we're talking about. Oil has given up a little bit from the top. But what is your base case projection on inflation itself?
As I said, we do think it will moderate. The US is largely a service sector economy. Manufacturing is less than 10% of US economic output. So, yes, there are price pressures in those commodity markets that are impacting manufacturers. But as we saw with the Institute of Supply Management, the sector is contracting. Does the sector have pricing power to actually pass that on to consumers and other businesses? What's more important for US inflation and keeping inflation sustained is what happens to wage pressures. Because, as I say, in a service sector economy, the biggest cost input is the cost of labor. And if the jobs market is weakening, wage pressures are becoming more subdued, then there's perhaps less risk of inflation staying high for a prolonged period of time into next year.
All right, James, we'll leave it on that note for this morning. Great talking to you. Thank you so much for staying up and taking all our questions today. Appreciate your view. Well, with that, we have to head into our first quick break. Coming back on the other side, all the stocks that you need to watch out for. And it's a very interesting list today, so keep it with us. Welcome back. As promised, let's straight away get to our list of top 10 stocks to watch out for this Thursday morning. And hitting it off the charts is what else but Kotak Mahindra Bank. Abhishek, good morning. Kotak is finding many ways to stay in the headlines of late. Tell us.
Mr. KVS Manian has submitted his resignation and it has been accepted with immediate effect, although in his letter he did write to give him a time frame and details as to how he'll exit, but it's been accepted by immediate effect. He ceases to be a director and key managerial personnel in Kotak Mahindra Bank. Now, in his letter, he mentioned that he intends to move on ahead, and he also wrote that it's time for the next chapter, and he's moving ahead with belief and optimism that he can yet again find a fulfilling assignment. So on 15th of February 2024, CNBC-TV18 had reported that Federal Bank has shortlisted KVS Manian as the CEO candidate along with two internal candidates as well. We had written to Federal Bank. Their response was, this process is overseen by the board in accordance with their succession plan, is what they told us. And incidentally, today is Federal Bank's board meeting, which will be held for their Q4 FY24 as well as FY24 results. And they have also mentioned that they will also discuss future plans and key initiatives in this board meet. Back to you.
Okay, thanks a lot for that, Abhishek. So that's a stock we'll be tracking. I'm tracking Ambuja Cement. They came out with their numbers yesterday. And we already had Sanghi Industries as well as ACC. So we're looking at the standalone numbers. And on the top line, it was more or less in line. The EBITDA was a bit of a miss because the margins that we were working with were around 19%. It did come in anywhere close to that. And the profit after tax as well was lower. Let's explain why, in fact, these numbers go down as a miss. If the top line is in line, but volumes are better, that told you that realizations declined more than expected. Point number one. Point number two is that, in fact, the realizations on a sequential basis were down close to around 7%. As of now, Ambuja has more of its exposure to West India and not South India. So that's why we were factoring in maybe the decline will not be as much. The other problem was that 11% of the clinker capacity was shut. So that's what hurt them as well. That's why purchases were much higher in this quarter. The stock will open up in the red, but the street could look through these numbers because they say that their expansion is on track. They're going to move from 79 million tons as a consolidated entity to 140 million tons. And they're sitting on cash of 24,000 crores on a consolidated basis. So stock opens up in the red, but I'll be interested to see whether or not there is some bottom fishing at lower levels. Last few days, the stock corrected from 650 to 620 rupees odd. But auto stocks, they'll be in focus because we had the sales volumes numbers that came us. Sudarshan joins us to help us out with a quick analysis on a couple of those names. Morning, Sudarshan.
Morning, Nigel. So if you talk about the overall trend from the month of April for auto companies, sales are mixed and can be divided into three parts. For passenger vehicles, demand was muted. For commercial vehicles, it saw an improvement, and for two-wheelers, strong run has continued. Now coming to stock-wise sales, starting with Maruti, going with red color, as total sales have fallen month on month, and it has fallen for 3 consecutive months. Total sales have seen low single-digit growth of 5% year-on-year, but have come in below estimates. For Tata Motors, I'm going with green, as total sales are higher than estimates, led by commercial vehicles, which is up 31% year-on-year. But for the company, passenger vehicle sales have seen low single-digit growth, and total sales have come in at 77,521 units. Eicher Motors going with red, as Royal Enfield sales have come almost in line with estimates, while commercial vehicle sales have remained weak. CV sales have slipped 18%, while Royal Enfield sales are up 12% year-on-year. Talking about outperformers of this month, starting with TVS, total sales are above both estimates and higher month-on-month and year-on-year. Total sales have risen 25% year-on-year to 3.83 lakh units. For Hero 2, April was a strong month, saw a healthy growth of 35% year-on-year, and the demand was led by 125cc and 400+cc segments.
All right, so thanks very much for that. Coming back to you for more. But let's go back to Abhishek. Cholamandalam reported numbers, and it's a good set once again on what's arguably a high base. Abhishek, morning.
Morning, Prashant. It's a robust quarter for Cholamandalam, and it has seen a turnaround under, Valian Subia. So, robust quarter, credit cost is at 8-quarter low, net interest margin is at 4-quarter high, and, you have a 13-quarter low gross NPA ratio. Credit cost has come in at 0.5% when compared to 1% in the previous quarter. Net interest margin has improved to 7.8% versus 7.4% in the previous quarter. The only flip side in the result was the cost-to-income ratio or the operating efficiency that's at the highest in 8 years, or even more, coming in at 44.7% when compared to 42% in the previous quarter. Strong business momentum, disbursals up 17.9% YOY and 10.7% sequentially. AUM growth is pretty robust at 36.7% YOY and 8.8% quarter-on-quarter. Kotak Securities was estimating 35% growth in the AUM on a YOY basis and about 7% sequentially. So it has been above estimate of analysts. And 13-quarter low gross NPA ratio, it's declined to 3.54 versus 3.94 in the previous quarter. Back to you.
Okay, so ticking all the boxes, that's Cholamandalam Investments. Thanks very much for that, Abhishek. In fact, we'll be speaking with the management of Cholamandalam at 9:30 a.m. Talk about the performance and, of course, the outlook for the current year. Let's quickly move on and get to Havells. Vamakshi is joining in with the Q4 report card. Vamakshi was looking good, and for a change, even Lloyd's did not disappoint.
Well, absolutely. It would be a good set of numbers from Havells. In fact, the numbers, like you rightly pointed out, were better than what the street was expecting and what we were expecting as well. It is a beat across the board. Revenues has seen a jump of almost 12.1%, and this jump is largely being led by a 14% jump in the cables business and 14.6% jump in the ECDs. Muted growth, however, was seen in lighting and fixtures as the price erosion continues for this segment. Nevertheless, the company's operational performance was quite good. EBITDA margin improved to 11.7%. The net profit also came in nearly 24% higher for the company. What's good this time around, barring ECDs, all business segments have reported improvement in margins. Lloyd, in fact, also has reported EBIT margin of almost 2.7%, and this has come in after reporting losses in 10 consecutive quarters. But however, when we look at the valuations, they are above historical averages. The 1-year forward PE for Havells is at 62.1 times as compared to a 5-year average of 52.4 times. Nevertheless, a good set of numbers might keep the stock point in the trading session today.
Okay, thanks for that, Vamakshi. Well, let's wind this down with Rima, who's here to tell us about Indus Stars as well as India Mart. Morning, Rima.
Hi, good morning. Let me start with Indus Stars, and here there are two big positives. One, the jump in the EBITDA. The EBITDA margins for the company have come in at 57%, which compares with 50% quarter-on-quarter. The reason for that is some reversal due to the past provision write-back. Remember, for Vodafone Idea, the company has been making some, write-offs. Now, they've received part of those past dues amounting to 361 crores. Therefore, the company reversed that, and that led to the jump in the EBITDA. which is why, despite a flat top line, the company's bottom line has gone up by 20%. Secondly, the tower additions in Q4 are the highest that we've seen in the last 3 years, and the company in the conference call indicated that this is on account of Bharti's expansion in the rural area. The other one I was looking at is India Mart, where it's a steady set of numbers, top line growth of 17%, some margin expansion on a year-on-year basis, driving a 44% jump in the company's profitability. Back to you.
All right, Rima, thanks very much for that. Well, in fact, we had the management of India Mart joining us at 10:15 later this morning, so don't miss that one. Adani Wilmar is the next one we focused on. Mangalam is here with details on that. Mangalam, morning.
Good morning. So good results coming in for Adani Wilmar. The company had given their fourth quarter update as well, and out there as well, they had spoken about volume growth. But importantly, what the results tell you is that there is strong operational performance improvement as well. Where the overall revenues were down about 4.5%, the EBITDA has actually jumped by over 200%, and that's largely because the company has exhausted some of its high-cost oil inventory, and palm oil prices are lower as well. And as a result of which, the net profit was up around 67.5%. Edible oil volumes for the company were up 11%. Food and FMCG volumes as well grew by about 13%. So in the edible oil business, the EBIT jumped by about 205%. The FMCG business as well saw 16% revenue growth with a 175% EBIT growth. All of that was coupled with a 60 basis points market share improvement in both their refined oil segment as well as the wheat flour market share as well. So all these things point to a positive move for Adani Wilmar. We'll also watch out for some other listed oil players as a result of these results.
Okay, thanks a lot for that, Mangalam. Well, Abhishek joins us to help us out with a quick analysis on Five-Star Business Finance. Abhishek.
Well, Five-Star has reported a strong number. Just to caveat that their capital consumption is very high. In last 2 years, they have consumed more than 2,400 basis points of capital. Net interest margin has improved sequentially by almost 35-40 basis points to 17.2% versus 16.8% in the previous quarter. Disbursal growth is robust at 20.5% YOY and about 10.5% sequentially. That has helped the AUM growth as well. AUM growth has come in at 39.5% YOY and about 8% sequentially. So their NII has come in at 481 crore, which is up 33% YOY and about 9.1% sequentially. Healthy profitability as well, which is grown by almost 40% YOY and about close to 9% sequentially. Back to you.
Okay, got that. Thank you, Abhishek, very much for that. So let's quickly recap our list of top stocks to watch today. The ones that have positive news flow are Hero Moto, Cholamandalam, Indust Towers, Adani Wilmar, Havells, India Mart, and Five-Star Business Finance, while stocks with negative news flow around them are Kotak Mahindra Bank, Ambuja Cement, and Maruti. Well, those are the key stocks to watch. Let's move on and get all the commodity cues of the morning. We have Manisha Gupta joining in for exactly that. Manisha, good morning. I think equity markets at least will be rejoicing that fall in oil prices. What's on your radar?
Well, yes. The markets are reacting to the U.S. Fed meeting announcements yesterday. It was on expected lines, but the lines suggesting that, there is no indication of rate cuts anytime soon is something that the street is looking at. The crude oil prices fell 3% overnight, and they're down by 8% in last 1 month now. Well, the increase in U.S. inventories and U.S. production and easing geopolitics, all of that really seems to be weighing onto the markets right now. But it would be the summer demand in the month of May and June that would decide the prices going forward. There is some profit taking that we are looking at in metals also. While it has been a stellar April, the month of May has started slightly on a weaker note for many of these metals. So whether it's gold, silver or copper, which has now come off its $10,000 a ton level, also has seen some declines coming into the market. Same is the case with steel, which fell 2% yesterday. Zinc, aluminum, all of that trading slightly in the negative in Asia right now.
All right, Manisha, thanks very much for that. So that's commodities with Manisha, and that's something we will revisit as we go along. But we'll come back with Deepan Mehta, Director at Elixir Equities, for some fundamental stock check. So much to discuss, so we'll throw a lot of questions Deepan's way. Stay with us.
Motilal Oswal.
Welcome back. You're tuned into Bazaar Morning Call. Well, we run you through all the top stocks for you to track, but you need to keep an eye out on the Godrej group of stocks as well. I recall Nisha had given us a heads up that there could possibly be some kind of an agreement and some kind of corporate development on that front. Well, that's been announced, Nisha. So fill us in with more details.
Thanks for that, Nigel. Yes, it's been 5-year-long drawn process of negotiation and finally an amicable settlement in one of India's largest, oldest conglomerates that we know of, and that has separated amicably between the two family factions. Now, the two factions of the Godrej group that we are talking about that have been formed with this family settlement is GEG as well as GIG. GEG will be led by Jamshed Godrej and family, and GIG by Adi and Nadir Godrej families. Now, Jamshed Godrej family will own Godrej and Boyce as a bulk of the value coming in the company, which owns the Vikhroli land, which is going to be creating the bulk of the value there. When it comes to Adi and Nadir Godrej's faction, Firoz Shah Godrej will be taking over from Nadir Godrej when he retires in 2026, and they'll be holding and controlling most of the listed companies of the group. Now, when we talk about some of the disputes that arose and have been settled, there have been land, brand, as well as the valuation. In brand, both the factions will be able to use the brand since it's a family name. They have stated Godrej Properties will continue to retain the MOU with Godrej and Boyce when it comes to the development rights or ROFR on the Vikhroli land development. Now, sources with direct knowledge have shared additional information with us which have not been announced. $20 billion is the total deal size. That is the estimated valuation or enterprise value of the owner's stake in the group on the whole, which has been agreed upon as part of the settlement. Godrej Properties retains the Vikhroli land MOU rights with Godrej and Boyce, but sources do indicate that there have been added obligations on Godrej Properties on using this rights, which needs to be seen in the fine print. GEG, that is Jamshed Godrej faction, is likely to also transition into a new logo, even though the Godrej brand can be used by both, but a differentiation in the logo in 1 year's time is required. And finally, a lot of share transfer, inter-se transfer of shares are likely to happen, with a lot of cross-holding of the other faction with unlisted companies holding in the listed companies, and that could be seen on the exchanges. In fact, some bit of that has already been actioned, where Adi and Nadir Godrej have launched an offer for 26% stake in Aztec Life Sciences, which they hold indirectly through Godrej Industries. So all in all, a lot of negotiations over 5 years. Sources do indicate the fatigue factor also drove to a conclusion and harmonious conclusion in this settlement. And some of the key advisors like Uday Kotak, Cyril Shroff, Zia Modi and Nimesh Kampani played a very meaningful role in bringing together and building the consensus between the families.
All right, Nisha, thank you very much for that neat explainer. And I think what you said right at the end is also really, really important, that this was not bitter, it was not acrimonious, very clean separation and settlement. Perhaps the listed entities, all of which are under the Godrej Industries group, Nadir Godrej and Adi Godrej. Perhaps that's one positive that they'll take away from. But yeah, of course, the land has completely clean, in a very clean cutaway, has gone to Godrej and Boyce, unlisted. So let's see how that plays out. Deepan Mehta, director at Elixir Equities, is with us now to talk about all of these stocks, and there's so many of them in the news this morning. Deepan, great to have you on the show. Hope you had a good midweek break. Let's start with the Godrej settlement and how you are viewing the listed entities and whether you take any action given the news that's come in.
Yeah, good morning, Surbi, and thank you for having me on your show. Yeah, it was a good midweek break, but I think too many holidays last April and this, so time to get down to business. I think it doesn't make much of a difference to the Godrej stock price or the minority shareholders. One minor uncertainty out of the way. The best part is that there is no change of management anywhere, and some of the Godrej group companies are doing exceptionally well, especially Godrej Properties. And at least that their deal with Godrej Industries and Godrej Boyce remains intact, which means that the entire development right, the first right of refusal, is with Godrej Properties. But nonetheless, I think Godrej Properties has been diversifying away from the Godrej Group land bank as well. So that risk factor also has got mitigated over the past few years or so. But I think it doesn't make much of a difference to the valuations or the business trajectory of the listed Godrej Group companies.
All right. Hi, Deepan. Good morning and good to see you, Ben. What do you make of Kotak Mahindra Bank? You know, I have a big name, Mr. Manian, moving on. And, obviously all eyes will be on Federal Bank as well. But what do you do with Kotak Mahindra Bank? And I ask you, because the stock has been a relative underperformer, still it's not cheap. It trades around 2.4 times price to book. The NIMs could be under pressure. The ROAs as well could get a little bit diluted. So what do you do with the stock at current levels? Will you look at maybe doing a month-to-month investment or periodic investment, or do you say there's too much of fogginess out there? I'd rather stay away.
Yeah, good morning, Nigel. I know that Kotak Bank is going through a rough patch. Of course, they had the regulatory action a few weeks ago, maybe about a week ago or so. And then we have this designation. But look, Kotak Bank is a very strong institution. And if they can manage the exit of legendary banker Uday Kotak, then this is also something which they can easily, manage and overcome, if at all. At the same time, I think that, the new CEO has to really try and drive the bank growth rates higher. The reason for the underperformance has been the conservative kind of lending practices. They have, of course, protected their the NPAs, and even during bad cycles, their NPAs have always been under control. So it has to be a fair balance, I feel, as far as Kotak Bank is concerned. And valuations are now very, very comfortable levels. Great technology platform, a lot of value being created in subsidiaries as well. So I'm not that negative on Kotak Bank. It's just that I can't find any buy triggers. So for the time being, I think if you're invested, remain invested. But from a fresh investment perspective, I think there are lots of interesting companies within the NBFC and the bank space. Smaller players, I think they should do very well over the next 2-3 years and provide the outperformance.
What about, Deepan, hi, morning. What about Federal Bank? That's the other one, the other side of the coin, at least in the very near term. Abhishek had reported that, Mr. Manian was one of the candidates who was kind of to be considered for the top job at Federal. Of course, we don't know if that's where he's headed, but any thoughts at all?
See, I think from Federal Bank point of view, it may remove one uncertainty because the present CEO was also quite dynamic, or rather is quite dynamic, and he had scaled Federal Bank pretty well over the past few years or so. Valuations are very attractive for Federal Bank. So I think once this uncertainty is away, and if you see good performance coming through, there's definitely a case for re-rating of the P multiple of Federal Bank. The size also is just right, which means that they can grow at that 15 to 20%. For many years or so, and they have the access to a larger market. If they just go on increasing their footprint as they have been, I think they should be able to sustain the growth rates.
Oil has seen a large fall, and this is a slightly question for the very near term, but it's a big fall, the largest single-day slide since October last year, 5%. Typically you'd see these sort of oil sensitives move, but what's the best play here? Is it oil marketing companies? Is it a name like Indigo, which has been seeing multiple upgrades, etc. recently? What's your sense?
Shant, I'd go with Indigo any day, but first a disclosure.
Flying with Indigo any day.
We and our clients are invested in it, so our views are biased. I think the company is really going from strength to strength. And, with the way the summer schedule is playing out and the kind of ticket prices which are there, these high yields are to be around for a long time, and lower oil prices are not going to get passed on that easily. A lot of it will flow to the bottom line. And look, they are expanding their capacity aggressively. A lot of structural changes have taken place, higher number of airports, more and more Indians traveling abroad. That provides an opportunity for Indigo. They even changed the ordering pattern, and they're going for wide body planes, which means that they are clearly focusing on the international routes, which could be more profitable. Valuations are reasonable. There is some uncertainty around the kind of ownership structure and how the sale of the shares will play out. But I think at this time and in this kind of an environment, you can easily absorb the stock of the promoter.
Okay.
Just speaking of oil, Deepan, just very quickly, IOC, we had a big shocker on Tuesday, right? Because that number was so weak, the GRM number was just a complete miss. There was some selling in other OMCs. Today there's cushion because of the fall in oil prices. But otherwise, how do you look at OMCs now?
See, I think they'll have trading rallies from time to time, and you will never be able to predict the numbers for oil marketing companies. And structurally, they have been growth creators. So I would just say that look for other ways to play the decline in oil prices rather than oil marketing companies.
Okay, now Deepan, stay with us. I think we're just coming back to you. Lots more to discuss, right? But let's go across to Anuj as well, who's standing by with what he's making of the market this morning. Anuj, good morning.
Morning, Prashant. You know what? Tuesday's last hour slide after the market hit all-time high perhaps tells you that one round of that rally is done now, and the market may actually now need some kind of consolidation, maybe a 2-3 day consolidation. It's entirely possible. The Nifty is trading way above the near-term averages, the 10 and 20-day exponential moving average. Just to put on record, the 10-day MA is 22,475 and the 20-day exponential moving average is 22,408. So it's possible that maybe the market consolidates a bit and the moving averages move up. Even FIs are now net long, normally a time when the markets actually peak out. So that's also another indicator. Put call ratio is also a bit high. Let's see. Of course, globally, we've discussed all of the cues. For me, the one I'll latch on to is Brent crude prices. From the early 90s, now we are in the 80s. So that's, I think, good for the near term. I think the other important cue was what the Home Minister told us to our group editor, Rahul Joshi, that, the NDA is winning over 100 seats in phase 1 and 2. And he's not concerned about that lower turnout because election is going to be an important trigger for this market. Coming to levels then on the Nifty, as I said, the first support is 22,450 to 22,500 and then 22,350 to 22,400. On the upside, the resistance would come at 22,650 to 22,713. Today being a weekly options expiry, that's the option zone. And then, of course, the all-time high of 22,783. On the bank Nifty, I think it's more important to be stock specific today because Kotak will once again hurt and we need to see how other banks will compensate, especially, names like Axis and Federal. The bank Nifty is extremely overbought in the near term after hitting all-time highs. The 10-day exponential moving average is 48,526 and 20-day is 48,162. As always, I'll leave you with quote of the day, and this one comes from someone who was my boyhood hero. It's his birthday today. There was a time when Manchester United was untouchable and David Beckham was one of the reasons. I don't do anything unless I can give it 100%. That's an important quote.
All right, Anuj, thanks very much for that. That's an interesting one, as always. Appreciate it. Now, that's the sort of bit on markets and a bit of sort of life lessons as well. Deepan, I think is still with us. Maybe I can squeeze in one more question. Deepan, just a word on life insurance companies. We reported on Friday that entire saga on the surrender value is not done. And it's important for life insurance companies because IRDAI is giving it a relook. One had thought that with the earlier March Gazette, there was no change in surrender value. But we reported that the IRDAI chairman was not happy and he wanted to increase the surrender value. So it'll be higher than what it was before, but lower than what was feared. Just your thoughts, if you like anything in this space.
See, the insurance business keeps on getting affected by the regulatory changes, and there was a tax change also because of which the base last year was higher. So the insurance companies are struggling with a higher base also of the last fiscal. And these are great long-term businesses, but I think a lot of the growth and the upsides have got captured in. At correction, companies like HDFC Life, ICICI, Pru could be interesting, considering that they are steadily gaining market share when you compare over the last few years or so. But one of the cheapest stock is LIC. And what we like about LIC is the stock market gains. I think that will have a tremendous positive effect on the value of the company, enterprise value. And certainly there's scope for re-rating of the P multiple or price to EV multiple, given that stock market gains have been strong. And if they're able to kind of show growth rates in their core products, then investors certainly could look at LIC in more favorable light.
Okay, all right, Deepan, more questions coming your way, but have to take a quick commercial break here. So stay with us. We are back and our technical experts will also be with you to tell you what to do in terms of trades right now. So Mitesh and Sudarshan on the other side. Stay with us. Okay, welcome back. We've got Mitesh and Sudarshan with us with what they're making of things. Gentlemen, good morning. Good to have both of you here. Mitesh, last hour, the dramatic sell-off, holiday yesterday, but decent cues this morning. Oil is down, yields and dollar, etc., well-behaved. What's your sense? Do you think if we get a tepid kind of a start, 20, 30 points higher, one could build on it, or would you be a little cautious?
Morning, Prashant. See, I think that fall did, kind of disrupt the momentum at higher levels, but it's not kind of turned the entire structure negative. So I think the idea should be to see if there could be, a good entry point. For the Nifty, I think, I would look at spot levels of around 22,500, 530 as my entry band. In case we get it over there, I think good entry point with a favorable risk-reward equation. And on the Bank Nifty, I think the corresponding level will be closer to about 49,000. So the idea is that you've had some kind of a negative candle on an hourly basis, and that could suggest profit booking, but it's not something which is turning the tide. So you wait for that dip to happen to buy into it. Though today, I think we might open with a mild gap up or a mild positive bias. But for the index, the idea is to buy on declines.
By the way, those Ashok Leyland sales just flash, and they're right in the middle. So you've got Eicher, which has reported really weak CV sales. Tata Motors, which has blown the lights with about a 30% growth, and Ashok Leyland has reported a 10% increase. The medium and heavy commercial vehicle segment, that's done better, I think, about 15% over there. So one more added to the list to watch in terms of auto numbers. Gentlemen, good morning. Sudarshan, hi, let's come to you as well. What's the strategy for the index and specifically the Bank Nifty, given the huge volatility that we saw in the last hour on Tuesday?
Yeah, good morning. See, the market trend in the short term is up. That's been a theme since the last few days. And when the larger trend is up, the short term trend is up, there is only one trade for both the indices, that is to look for dips and buy them. Now we'll talk about the Bank Nifty's last half an hour performance day before yesterday. These things will happen. Markets are volatile. The Bank Nifty was also going in for an options expiry. Weekly options expiry does strange things to instruments, which we don't understand. We only know that there is a lot of volatility involved in it. So today the Nifty has that weekly expiry. We'll probably see a strong trend in the second half. I'm assuming it could be easily on the upside. Whether that trend comes or not, the trade for the Nifty is to buy on a 50-point dip, keep a 50-point stop loss, and stay on the long side of the market. And I think the same applies to the Bank Nifty. Look for a 100-point dip from the opening price. Go long, keep a 100-point stop, stay only on the long side.
Stay on the long side. Got that, Sudarshan, pretty clear with that view. What about individual stocks, Sudarshan? You go first.
Okay. Godrej Consumers is a buy with a stop under 1160. Lupin, which is now coming out of a trading range, big rally, trading range, imminent breakout, buy with a stop under 1570. The only intraday short is Tata Chemicals, where some kind of a distribution is taking place. May not work out, but at least you can consider an intraday short with a stop above 1152. And finally, we just heard about Tata Motors. Now, I don't know what kind of gap up that will give, but Tata Motors is on my list as a buy with an initial stop under 965.
Okay, got that. Mitesh, hi, morning. Let's get to your stock picks as well.
I also have more of buy calls. Astral, I think, was a stock which kind of gave a good breakout on Tuesday and is suggesting a trend which could see the stock price try and test levels of 2,200. So buy here with a target of 20, with a stop at 2090. HDFC AMC on a mild decline, let's say about a 20 odd point kind of a dip around 3870 is a good buying zone. Keep a stop below 3820. Look for 3950-60 as the target area. Also buy on Bharat Forge with a stop at 1260 or below 1260 for a trading target of 1300. And one sell call, that's Apollo Hospital. Recommend a stop loss above 6,000 for targets of around 5850.
Okay, all right. Got that, gentlemen. Thanks a lot for that. Well, let's get in Rajesh Palvia, the VP Technical and Derivative Research Analyst at Axis Securities, who joined us. Hi, Rajesh. Good morning. Good to see you in. Run us through the strategies that you have both on the index as well as individual stocks.
Good morning, Nigel. So looking at the overall structure, we are holding a bullish view, and we believe that this momentum is likely to continue further, and we could again register a new all-time high for the Nifty in very soon again, and this trajectory is going to continue further. Looking at the data setup, though we have a weekly option expiry for Nifty, so looking at data, 22,600, 22,500 are having major put-based concentration. So I think. If you get any opportunity near 22,600 or in between 22,500 zone, that's a buying opportunity for a Nifty spot in any kind of volatility if you get in the market. Looking at the overall structure, we expect that again Nifty will get the momentum on the higher side, and possibly we can cross level of 22,750, and once that level is crossed, possible rally can extend towards 23,000 also in next couple of trading session. To play this upward momentum of market, we are initiating here to buy 22,650 call option, which was closed at around 83 rupees. So we are projecting target of 150 to 160 for this call option. Keep your stop loss at around 50 rupees to buy 22,650 call option. On the Bank Nifty, the major put base concentration is placed at around 49,000. So till 49,000 is intact on Bank Nifty spot, our trend is likely to remain on the bullish side. And once Bank Nifty manages to cross about 49,000 is the major put base concentration. Once Bank Nifty manages to cross about 49,700 zone, then this rally can extend to 50,500 kind of zone also in next couple of trading session. So overall structure for Bank Nifty is also looking bullish. On the stocks front, from automobile, we are initiating here to buy Ashok Leyland. Stock scale up to the new all-time high trajectory. The way stock has given a breakout on a weekly as well as on the daily chart, that clearly shows that Ashok Leyland can extend its gain, and possible upside target we could see towards 205 to 210. So one can buy Ashok Leyland with stop loss of 186. The second stock is PFC. That stock has also managed to give its multiple supply zone, and looking at the long built up on a derivative data, we expect that PFC can also extend its upward momentum. So one can buy PFC for upside target of 455 to 460. Keep your stop loss at around 432. And the third stock that we like is from oil marketing company, that is BPCL. Stock managed to give breakout of flag formation on weekly chart. The way most of the OMC stocks have attracted the open interest on the long side, that clearly shows that BPCL can exhibit a good amount of rally in coming trading session. Possible upside we can see towards 630 to 635. Keep your stop loss at around 590.
All right, got that. Rajesh, thanks very much for that. So those are a list of stocks that you could look to trade. We'll take a quick commercial break here. We'll come back. Deepan is with us, and so will be the management of Orient Cements, where they reported their fourth quarter numbers. Stay tuned.
Co-powered by
Welcome back. There's a minute to go for the pre-open sessions. The first rates should be with you shortly. Deepan is still with us. Deepan, just a few more names your way, right? Mahindra and Mahindra saw a very large surge. It was a top Nifty gainer on Tuesday. I think there is an upgrade this morning from one of the sort of brokerages on Mahindra. Come in on something like a Tata Chemicals after that. It sold off. I was reading a Morgan Stanley note saying that there is perhaps more downside here. Based on earnings, and they see consensus earnings estimates being revised down 20-25%. So Mahindra and Tata Chemicals.
Yeah, Prashant, Tata Chemicals negative. I think they've been trying to build a business around renewable or lithium-ion battery materials, but that's still to scale up. Very positive on Mahindra and Mahindra, not just because of the UV business, but also I think if monsoons are decent, then M&M has got a very wide rural footprint on the auto side, and of course, more importantly, on the tractor side. So M&M could be in for good tidings over the next 2-3 quarters.
Okay, let me throw two more names. One is AB Capital. AB Capital was part of Nimesh's chatter list on Tuesday. There's some talk that there perhaps may be a large block coming the way, but some HNIs, etc. are interested. So AB Capital and REC reported numbers, and of course, stock was a big mover again on Tuesday.
Yeah, Prashant, both stocks are attractive valuations. Of course, REC is at very good valuation ratios, and growth is really coming through because of good opportunities. And I think they've opened up their lending book as well, getting more aggressive over there. AB Capital, I think, has been a conservative lender, and they've managed the down cycles in NPS pretty well. And now that I would say that relatively lesser competitive intensity is there in the NBFC, and they're benefiting from that scenario. And again, I think there's a scope for re-rating. AB Capital trades at lower multiples than compared to Bajaj Finance or Cholamandalam, which are equivalent companies. And if they're able to sustain good growth rates, mind you, last couple of quarters have been pretty decent, then certainly I think investors will try and bid up the stock price and expand the valuation ratios.
All right, Deepan, wishing you a good day ahead. As you said, we enjoyed that holiday yesterday, but now I get back to work. I think we've only got the voting day, which is not a holiday. And then, in fact, the next holiday is only in June. Wishing you a good day ahead, Deepan. Always a pleasure having you on the show. Let's talk about cement. Well, Orient Cement, the numbers look quite good, actually. The margins expanded in a difficult scenario. The volumes were flattish, so the management has done a fair bit on the cost side. Mr. Deepak Khetrapal, the Managing Director and Chief Executive Officer at the company, joins us on the show. Hi, Mr. Khetrapal, and good to see you in, Mr. Khetrapal. Let's focus on a couple of numbers then. You had told us that the EBITDA per ton could move to around that 850 rupees odd by the end of the year. You managed to achieve that, so that's good news. And the volumes for the year as well were close to around 6.15 million tons, which is the highest we've seen in the last 4 years or so. So good on that. My question to you is on both these two aspects. Give us a guidance on the volume front, first of all. How much can you grow on this base of around 6.1 million tons? And the EBITDA per ton, given that the pricing environment has been weak, what should be the best range we should be looking at for this year?
Nigel, and always good to be here on your show. As you yourself have pointed out, I think in Q4, we internally, I think within the company, I must say that we are a little disappointed because I think till Q3 YTD we were doing quite well. And the growth that we anticipated to come in Q4 didn't turn up, not just for us, for the entire industry. And in fact, with the results which have come out, what we are seeing is people who tried to go for more volumes actually have not gained much in profitability. So I think we have to be conscious of the fact that while, yes, we have very, very low growth in volumes and sales, but the strategy that I have always maintained we follow at Orient Cement is we actually try and do business with reasonable margins always. And that is driven basically by what I keep taking a huge amount of pride in, and all of us do at Orient Cement, the premiumization strategy that we followed and the premium products, premium brands that we've launched in the market, they are holding us in good stead. So despite volume not going up, our profitability improved significantly. I think on profitability, we would be one of the rare companies in this quarter who managed to improve EBITDA per ton over the previous year. I mean, that's one trend which I think we managed to beat. So that's on the Q4 that has gone by. Full year has been compromised because we didn't get the growth and the prices in the month of March, which sort of brought us down to growth rate of just about 6.1%. And we internally, I think we managed to do volumes of close to 97% vis-a-vis what we had set out to do at the start of the year. So 97% doesn't sound too bad, but when it hits your profitability, you feel bad. Coming to your questions about what should we look forward to in the new year. So as of now, as I'm sure all of us are aware, the month of April has been impacted quite badly in terms of volumes and prices, and largely to do with the elections which are on, the non-availability of construction labor, which are largely migrants. They go back to the native places to vote, extreme heat conditions, water shortages emerging. So lots of negatives in the environment as of now, April. And I think my own guess is April, May are going to be soft. As we move into June and the election results come out and hopefully, like I said, the normal activity resumes in the construction industry, we do believe the growth to kick in. The whole industry is talking about a growth of between 6 and 8%. Given that we do keep following the right strategy, we do think if industry is going to be at 8%, we would gun for at least that much growth, which would take us in the region of 6.6 million tons, 6.7 million tons in the new financial year. What's worrying as of now for everybody is the fact that the prices, which had come down dramatically in the month of March, they have improved marginally in the month of April, but not much gain. But thankfully, they are not sliding down anymore. The improvement in prices that we think we should expect should happen only once the demand stabilizes and starts looking up, which, like I said, the scenario perhaps would be post-elections.
Mr. Khetarpal, hi, good morning, sir. Can you just quantify that? How much of the March slide has been made up in April? I mean, what is the price increase that we saw in the month gone by, and how confident are you about further hikes? Because then June onwards we get into monsoons. Are you confident of any more hikes in May?
I personally do not think, unless the demand improves, I don't think the pricing is going to improve, because the demand has to be there in the market, right? And we are today struggling with low demand conditions, so I'm not hopeful in the month of May. June, you're right, the monsoon does kick in, but monsoon softness, which is there, it's related to that price, there could be an improvement, not on the prices which prevail in the non-monsoon months. So I do believe once the demand picks up, monsoon impact will be there, but it might be better than the monsoon in the previous year.
All right. Mr. Khetarpal, on that, just to take Surabhi's point forward on pricing, I mean, as a construct, as a way of thinking, is it correct that if you don't see meaningful price increases in April, right, and then rains hit by June, middle of June, it kind of gets pushed out, at least towards the second half of the year. And so then, I mean, the pricing-led kind of story is out broadly, at least for a large part of the year. Is that the correct way to read it?
Well, quite frankly, if we start looking at the trends in the market have always managed to surprise all of us. Who had predicted in the month of March the prices will be so low, if you go by the trends? What we've seen in the past does not necessarily tell what can happen in the marketplace. I'm still quite certain as the mood comes back to running the government, running the businesses, and the demand picks up, that sentiment will help us perhaps to recover a little better price in the marketplace. I'm a lot more confident about that.
All right, Mr. Khetarpal, what about the EBITDA per ton? Volumes, you've told us it could be in the vicinity of around 6.5 to 7 million tons. What about EBITDA per ton at current pricing? You managed to get to around 850 rupees. Where's it headed from here?
One thing which is working in our favor, besides the premium brands, as I mentioned to you, is the new investment that has now become productive in our waste heat recovery system and also the solar power. Not only does it give us a lot more green power, it also would add straight away, coming just from benefits from these two investments, would be in the region of about 50 crores a year. Now, 50 crores on a volume of under 7 million, we're talking about 75, 80 rupees a ton of gain straight away there. Even if the prices do not improve. So that's where, let's say, our internal confidence is. More importantly, also, we should be able to get relatively better margins because our premium products keep selling more and more. Just to sort of bring the point home, even in a year where the consumer demand has been very muted, our premium brands have grown 31% year on year. And they now constitute about 22% of my total B2C sales. So these are internal strategies that we have the strength within the company with. And whatever be the markets, I think these two, one, invest in green power, and second, premium brands should hold us in good stead. So I would definitely to wager next year we should be 850, 900 in that range.
Okay, 850, 900. We got that. Final question, Mr. Khetarpal, and we need to ask you on that. We are very, very responsible, and we'll report once we are pretty sure. But various sections of media keep reporting that Orient Cement is on the block. First, they were talking about, Ultratech Cement. Then it was the Adani Group. In any communication from Mr. Birla with regard to, does he want to continue running the business, or is he looking for a better suitor?
Well, the instructions to me from the board and Mr. Birla are very clear. Keep going the way you're going and keep building the growth. We, in fact, currently are very sharply focused on getting the approvals. Last quarter also I mentioned the public hearing is and all work being done at both the plants for expansion. I'm happy to say both the public hearings have been completed successfully, and the papers are now being moved for environment clearances for expansion. I would repeat, we'll first take up the expansion in Chittapur. That should start, I believe, within this half of the year, and followed by the construction that we will perhaps need to pick up quickly for our split grinding unit to support Devapur, which, as we mentioned last quarter, in the Madhya Pradesh Power Corporation, we are in the final approvals are almost in place. Small little negotiation is going on. So a couple of expansion activities are going to be on very soon, and I have all green signals from Mr. Birla and the board to go for the investments.
Got it. All right, Mr. Ketrapal, appreciate you joining in. Wishing you all the best. You're clarifying for the time being, the company is not on the block. Well, it's 9:10, so let's get in. Sudarshan back with us on the call. Sudarshan, what's the call?
Well, consider buying Tata Motors with a stop under 965.
Mitesh, what about you?
I'll go to buy on Astral for targets of around 2.
Okay, got that. By the way, Bajaj Auto numbers flashed by. They are super strong numbers. 17% growth year on year, whereas Nomura was expecting just a 10% growth, even month on month. March to March to April, the growth is about 6%. So one more stock on the positive side to watch out for. But let's go back to that Godrej family settlement. We have Nimesh joining in on the potential impact on stocks. Nimesh.
Well, now that it's official, I've looked at 3 companies which can be potentially impacted because of that family settlement. The first stock is Godrej Industries. It's the holding company of the Godrej Group, which is part of the Adi Godrej faction. Now, it's, as I said, it's a holding company of the Godrej Group. It's still trading at a 54% discount, holdco discount to the stake that they hold in the group companies. They own 24% in GCPL, 43% in Godrej Properties, and 65% in Godrej Agrovet. So that's the first stock which will be in focus. The second stock is Aztec Life. Within the Godrej Group companies, this is the only stock where there is an open offer which is getting triggered. So Adi Godrej family will have to make an open offer for 26% at a price of 1,069. Only because the other faction has been classified as non-promoter. So this is one company where there's an open offer. So that will be in focus. The third stock is Godrej Properties. CLSA put out a note in the morning. They say that there is enough clarity now with regards to the Vikhroli property where Godrej and Boyers will be the owner and GCPL will only have a development right. So on back of that, there won't be any SOTP value for the holding of Vikhroli land. And CLSA has a sell rating purely on valuations, and they have a target price of 2,100. So Godrej Properties may be in the red to start with.
Okay, to start with, stock may be in the red as Nimesh points out. Nimesh, thanks very much for that. Havells is the other one which reported numbers. There's a bull versus bear scenario here. Vamakshi is here with details. Vamakshi, morning.
Well, good morning, Prashant. Well, yes, no doubt that Havells has reported a strong set of numbers as compared to what the street was expecting. On the bull case, we have UBS that says that profitability is back for the company, but sustainability is important to monitor. They believe that the stock has underperformed its peers in the last 12 months, but this is set to reverse given sustained competitive positioning, gradual demand uptick, as well as upcoming capacities for Havells, which is why they've gone ahead and given a buy rating and raised the target price for the company to 2,040 rupees per share. HSBC also believes that Havells is now firmly on a strong profit growth path, which is why they've also given a buy call and raised the target price to 1,800. While on the flip side, we have a note coming in from CLSA which says that valuations for this counter are quite demanding, and that is the reason why they've gone ahead and downgraded the stock to sell from underperform. As we also have a note coming in from Motilal Oswal. They've gone ahead and raised EPS estimates by 4 to 5% for FY25 and 26, but the valuations are looking expensive, which is why they too have downgraded the stock to neutral from buy and given a target price of 1,780 per share.
Vamakshi, thanks very much for that as well. So, there's a lot to watch this morning. And I think we're hitting market open in about a minute, just counting down the seconds. 2 other names I want to throw into the mix. One is BAC. Keep an eye out on that one. I think there is some tariff increases, etc., which, of course, the stock sold off, remember, earlier in the week. On the back of the regulatory fee, which SEBI said they had to pay based on notional turnover. But I think there is positive, at the margin, some positive news flow for BSE with regards to tariffs, etc. So they're kind of compensating for that, 3% on BSE. And the other is Vodafone Idea, maybe. A Bank of America note this morning is upped their kind of rating to neutral. The price target is 14.5, but it's just that a large MNC broker with... it's kind of sort of coming in, commenting on a name like Vodafone Idea. So interesting. The open is down 22,597, 22,600. If you're looking to looking for opportunities to go long, it's a good start. 30 points, okay, almost immediately being bid up after a flat or lower start actually. So 30 points off the lows. But we'll see. The bank nifty is down about 13, 14 points. Okay, now flat 49,400. Making up its mind, blinking red and green. Mid-cap index is up about 170 points. That's about 1/3%. And I think we'll have the small-cap index, which is also going to come up with some first rate. So 0.5% higher for the small-cap index. That's about 75, 76 points in the green.
Okay, I was looking at the oil marketing companies. Big spike up there on HPCL, IOCL, BPCL, all thanks to the A huge drop in oil prices, 3.5% decline on Brent overnight. So those are off. Some of the reactions coming in from the auto pack are interesting. M&M is still charging higher after that XUV 3XO launch. Remember, it was the top gainer on Tuesday. It's putting on some more, 1.5% this morning. Tata Motors is positive, about 1% or so higher. Bajaj Auto, just about 0.5% increase, though the numbers are very, very strong. But I mean, I guess the mileage the stock is getting after a huge rally is diminishing a little bit. What else is moving higher? Power Grid, Adani Enterprises on the upside. Coal India, which is reporting numbers up about 1% as well. On the downside, Kotak Mahindra Bank. This stock has become the worst Nifty stock for 2024 so far, with a drop of 17% this year. 2.5% gone this morning as well. Maruti is reacting negatively to what was a pretty weak set for April in terms of sales. These are stocks on the way down. Quickly checking Federal Bank as well. Let's see what Federal is doing. Yeah, 2.5% up on Federal Bank. So those are some of the early reactions that are coming in. Godrej Group, let's get some of the Godrej Group companies. Godrej Agrovet is the one that's up about 4-5%. And obviously Aztec Life Sciences is really popping because that's where there's going to be an open offer. That company has gone to the Adi Godrej and Nadir Godrej side. And because of that open offer expectation, stocks up about 8%. Interesting reactions, very quiet on the headline index, but Nigel, lots of stocks reacting to numbers, earnings, etc.
Well, that's right. On Kotak Mahindra Bank, there appears is a very large trade. Yeah, 0.5% equity changes hands. So just wanted to point that out. A few stocks are seeing follow-through buying. Post the big reaction that we saw on Tuesday, REC had recovered considerably from the low point of the day. It's seeing a follow-through. Remember, it's been the big outperform up 3 times, I think, in the last 18 months. That's up another 3%. So thumbs up out there. The other one I'm looking at is Jana Small Finance Bank. We had the management here with us in the studios. He sounded extremely confident. And that stock, after seeing a big rally, is up another 4% in today's trading session. So beautiful move out there. Just spoke to the management of Orient Cement, and they were sounding quite confident. They're talking about around 6.5 to 7 million tons, with a EBITDA per ton of around 850 to 900 rupees. For the time being, the street likes that. Remember, that's ahead of their con call. So we here at CNBC-TV18 have brought you the first cut with regard to Orient Cement. The stock is up 2.5%. It has some valuation comfort as well. Moil, they've gone ahead and increased prices by around 25 to 40%. We had given you a heads up a week or so ago that there's a possibility that a price increase will come about. But tell you what, the stock is up 30% in the last 1 month or so. So from the highs of the day, it's already corrected 2.5%. Let's see where it goes from there. Jindal Stainless, they are putting on the table close to around 5,400 crores. They're focusing on backward integration and also on downstream products. The street likes that. It's been a big outperformer. It's up another 2% in today's trading session. So good going on that name as well. So fair to say, it's been a good start with a couple of these outperformers continuing to outperform. KFin Technologies as well. We had the management. They sounded confident. The stock sees another leg up. So KFin Technologies, another one on the radar. Yes.
The news flash at the bottom of the screen is in regards to morning context story, which basically suggested that the ICICI Bank MD, Mr. Sandeep Bakshi, wants to leave, citing personal reasons. The morning context story essentially said that the RBI wants him to stay put, and that's the gist of what the story was about. Now there's a statement coming in from ICICI Bank. It's calling the morning context story report of Mr. Bakshi leaving baseless. And there are a couple of more statements which I'll just read out. Categorically deny information published of MD expressing willingness to leave is a figment of the information of MD leaving is figment of imagination, and it is baseless, and so on and so forth. So just completely, not that there was a big reaction or anything to the story, but I think news wires like Bloomberg, etc., had picked up that story, citing Morning Context, the original publisher. But now, of course, the bank now coming out and saying, well, this is completely baseless, no truth to it, figment of imagination. So as clear as it can be in terms of clarifying that this is not the case at all. Okay,
but,
I think...
pointing out the intraday chart, I mean, it's very, very sort of early in the morning. There's a bit of a sort of shake-up on ICICI. It started positive, negative, though there's a complete denial coming in. I guess it's just that environment where... shareholders, when news like this hits you, I mean, even it's great that the bank is night. By the way, we did not pick up this story in our top 10 for very obvious reasons, because we were waiting for a confirmation, a comment from the bank. The denial is very, very clear, Prashant, I guess, in this case.
So I think we can let it be now. So that's ICICI Bank for you, right? I mean, on your screen. But some other names. It's a vibrant start once again in the broader market. 40 points higher is what you have. 22,650 on the index. 3:1 is the advances to decline ratio. So it's pretty solid. Chola Finance, you will just hear from the management in another 10-15 minutes or so. Chola Finance is starting about 4.5 higher. It's a very strong beat. India Mart 10-15. You'll hear from the management 5% higher on India Mart. We got, I was talking about, Nigel mentioned as well, I was talking about REC earlier, 4.5 higher on that one. Big mover from last Tuesday. Nigel mentioned Moil. Jana, he mentioned. What else? Adani Total is up 3%. So 956. It's got solid volumes. Shakti Pumps is up 5. I mean, that stock's been moving circuit to circuit. There's a large order that they got recently. But look at the volumes. That's what stands out. Now the price move. K Fintech, we had the management same time on Tuesday. And 3.5 again on K Fintech. It did well on Friday, on Tuesday and that day as well. So it goes. I mean, Greaves Cotton is another 3% higher. G Shipping is up about 3% or so. But then you go down the list and volumes start to thin out a little bit overall. Yes Bank is down about 2%. On the downside, I mean, just to take a look at a few things, Godrej Properties is down 2.5%. And again, we've highlighted this since the morning. Supreme Industries had a massive 15-16% move after earnings, so it's cooling off about 3% lower. Adani Green is down about 1.5%, and you've got something like a Hindalco, which is down 2% as well. Maruti is cooling off. Maruti, of course, reported numbers last Friday, and it's down about, it didn't really have a big move or anything after earnings, but it's down about 1.4%. Castrol is the other one, which is down 1.5%. Castrol is also a management you'll hear from in just a bit from now. Shiv Puri is our market master of the day. He's founder and managing director at TVF Capital Advisors. Shiv, good morning. Good to have you with us here. Just a quick take on earnings so far. Do you feel they've been a little underwhelming at the margin? Or you think it's just sort of, we've had many quarters of upgrades. So natural for things to maybe slow down a little bit. So that, and of course, I mean, if you want to comment on Kotak, please do. How do you read this? You've been, I think, a big bull on Kotak and the entire large private financial space. So how are you reading this one? Go on.
Thanks, Prashant. Yeah, I think earnings have been a little subdued this particular quarter, by and large. There are pockets of exception that exist. You're seeing some private sector financials do well. You're seeing certain discretionary companies do well in the consumer space, whether it's both product or services. You're seeing some companies in retail, in hospitals, in both the product and the retail side do well. You're seeing companies exposed to the infrastructure space and the capital goods space do particularly well. So there's pockets of strength. And then in areas like FMCG, volumes are challenged and continue to remain so. And so you have some other areas where earnings have been weak. With respect to financials, not commenting on any particular institution, and we don't have any involvement in that name for a while. But financials is currently has a few factors that are very important for this year. One is the macro, and then one is the micro. On the macro, the important point is what the Fed is going to do with interest rates. I think it's very clear that liquidity is going to be a lot tighter than what people thought 6 months ago, or even at the start of the year. We heard Powell speak yesterday, and he mentioned that while interest rate increases are off the table, the rate decreases will be data dependent, and the data is not showing anything on inflation softening to their 2% mark. So liquidity is going to remain tight. That's going to have implications on what the rate cutting cycle in India is going to be, as well as what foreign flows are going to do. However, that will come in the future, so that's something to keep an eye on. On the micro side, I think we've seen, regulatory compliance become a very important aspect of Indian financial services. It always was, but I think the enforceability is becoming more stringent. And so, in evaluating businesses, whether it's banks or NBFCs, ensuring that they have the best regulatory compliance is incredibly important, because I don't think this is the last of what we've heard from the regulator.
Hi, Shiv. Good to have you in this morning. Thanks for joining us. So that's financials. Now, tell us in your portfolios right now, all things being equal, I mean, the market that's moved on steroids, PSUs have rallied, a lot of industrial and capital goods stocks, etc. They've all rallied. in your portfolios, beyond financials, what's getting top billing right now? And where are you still comfortable deploying fresh money at these levels?
The second is a lot harder to answer. The first being given where valuations are, obviously. But on the first side, you're seeing, as I was, alluding to earlier as well, you've got two types of consumers. You've got the aspirational consumer that is really spending on discretionary products and services. So, for example, healthcare services, you're seeing a lot of expenditure, and that's driven partly by insurance, partly by disposable income. Not surprisingly, that's an area that's getting a fair amount of increase in how expenditure is coming. So, generally good quality hospitals are doing well. In retail, you're seeing some of the higher quality retail discretionary companies do well. And I think those trends will continue for the rest of the year. So we're quite excited about some of those areas. And these have been areas that we've been involved with for a long period of time.
Okay, so just to follow up on that point, I mean, a lot of these themes have also run quite hard. For instance, top-notch hospitality, or if you're talking, discretionary consumption, whether it's the jewelry stocks, etc. That's where the move has been, right? Top-level realtors, take DLF, Oberoi, etc. So again, the second part of my question, that are you comfortable deploying more money there now, despite the run-up in stock prices?
Well, we saw one of the largest retailers report just a couple of days ago in the clothing retail space, and the results were significantly higher than expectations. And so I think, despite the valuations, you are seeing earnings growth beat what the consensus numbers were significantly. So I think in this market, it's going to be very important to make sure that companies are able to meet their earnings numbers and in fact exceed it. With certain pockets, we are seeing that continue to happen. In those cases, the valuation still looks somewhat reasonable. But for a majority of the names, as I was saying earlier, it's very challenging to find anything interesting to do at the moment.
Okay, all right, Shiv. Final question, short but effective chat today. Could you tell us what's your view on tech? The global headwinds persist, but some of these companies have very good balance sheets, and maybe the worst could be getting factored into the price. Your take?
Well, IT services, if you're talking about, is going to be challenged for growth. That is continuing to happen. You're seeing a lot of automation happen using AI, using LLMs, etc. And what you're seeing from the hiring numbers at the big IT services companies, I think is quite indicative of what the rest of the year is going to be looking like. So I think IT services is going to be challenged for growth for the rest of the year.
Okay, got that. We'll watch out for this. Thank you very much, Shiv. As Nigel said, a bit of a short chat, lots of earnings today, but really appreciate you being with us and good to have that context. Well, let's... Okay, in a bit, we'll move on to Cholamandalam. Yeah. Now, just to run you through the numbers, I mean, it's been a fantastic quarter for Chola once again, whichever parameter you cut it. This quarter was all about whether margins will be squeezed or not. Guess what? Chola has actually increased margins. I was just, reviewing numbers as we start that conversation. Margins are at 7.8% versus 7.4% quarter on quarter. So even sequentially, there's a margin improvement. Business has grown, in a big way. Disbursements are up almost 11% quarter on quarter. The AUM growth is about 9% quarter on quarter. Obviously, year on year, these numbers are looking even more robust. And all of this is happening with very, very steady and stable asset quality. In fact, asset quality is improved. I mean, look at the gross NPA levels. They've come down to 3.5% versus 3.9%. So, I mean, it's just kind of hit all the check boxes on the green side. That is Cholamandalam Investments.
Surabhi, the way they're growing, AUM is now, I think, about 1.5 lakh.
Yeah.
That basically means that it is closing the gap with the number 2, the second largest NBFC, which is, I think, Shriram Finance, pretty fast.
Yeah.
It's been a stellar rate of growth. But I think we have the management to go to.
Yes, we do have Mr. Arul Selvan, President and CFO at Cholamandalam Investment and Finance with us. Mr. Selvan, thanks for joining in. We're just rattling off your numbers and all of them are looking so good. So let me start with business growth because, that's absolutely growing at, lightning pace. Quarter on quarter and year on year. Just tell us how your different segments are doing. And I just specifically wanted to know this new business segment that has shown the maximum growth for you. So what all are you clubbing under new business? And just give us contours of whether you're hopeful for sustaining this kind of growth. Loan book growth for FY25. What are you looking at?
We don't give forward-looking statements, you know that. But I think we have come to a stage where we need to give some indication. I think we will still conservatively keep it at the 20 to 25% for FY25 as the growth numbers. Factors that is keeping us, on a little conservative, state is to assess the monsoon and the election results, as well as the liquidity positions, because we still have not full clarity whether there will be rate reductions in this year. Well, there are more expectations it will happen in H2, but as you know, the goalpost keeps moving. So, but we are working internally to keep our cost of funds low, as you have seen that, and you sounded it that the NIMs have kept improving. Cost of funds have come down, yields have improved, and we are making efforts there. On the growth side, yes, the new businesses are growing well, but these are more as a percentage terms, but in absolute terms, still the old business, which is the vehicle finance business, is the biggest contributor to the AUM growth. And the rest of the two old business or medium-term businesses, which were the loan against property and the home loans, have started really growing fast because they are making inroads into other parts of the country where originally they were focused mostly into the south and to some extent into north and west with respect to each of these businesses. Now they're making inroads across the country and we are seeing good traction. It's easy for us to grow in the other parts of the country because of our presence of vehicle finance branches and the knowledge sharing that is happening between the teams out there.
Right. Mr. Selvan, hi, morning. You're saying 20-25% AUM growth broadly, right? For
Yes,
25. That's where you'd be.
Yeah.
Okay, we're hard pressed to find negatives in the results. So let me try one. No, maybe not negative. OPEX went up substantially, Mr. Selvan. Think about 60-odd% on a year-on-year basis, 20-25% on a quarter-on-quarter basis. Could you tell us what this is on account of? And, are you opening branches at a very fast rate? And where will this sort of number be in FY25, if you can give us a sense?
Yeah, OPEX has gone up because of 2-3 reasons. One is, as you know, we brought in the insurance income into our own fold, being run it through a subsidiary because of the agency license. So this is the first full quarter the insurance income was coming into Chola. So that related cost of OPEX is going up there. The other part is also, yes, as you said, we have been increasing our branch network and also the penetration of the loan against property and the home loans into the rest of the country, necessitates incremental manpower and branch costs to be, addressed for. These were the major costs. Apart from that, in Q4 generally because of good achievement levels, then we revised the incentive levels, etc., and provide certain incremental incentives so that also adds to the cost of the in that particular quarter. Every Q4 you will see some amount of a slightly higher bump up on the OPEX. Broadly, our OPEX to asset ratio should be in the 3.1% range. That's what we target.
Okay. All right. Mr. Selvan, hi, good morning and congratulations. As you speak, in fact, the stock continues to move up. Now, two bright spots I wanted to focus you on. One is on the NIMs. They have improved by close to 40 basis points on a sequential basis. So good going out there. What is the broad band we should work with on the NIMs front? And also on the asset quality, how do you maintain such superior asset quality in a bit of a challenging environment as well? Is the best of asset quality behind you, or can you maintain these levels?
Yeah, so the NIMs will be at these levels. I would again conservatively put it, while we are making efforts to improve yield, predominantly on the vehicle finance side, because that is a fixed rate yield. And as we move forward, the contour of the portfolio changes where the larger part of the book becomes the higher interest rate book, because during COVID we had a low interest regime and that book was dragging down the NIMs of vehicle finance for some time. This will change in the coming quarters, so that would improve the yield. But the cost of funds, we will keep it at this level. There may be a slight increase also, because as we try to widen the scope of borrowing from relying purely on banks into ECBs and public debt and other parts of the borrowings, there could be some initial cost of funds increases. But I think between these two, we should keep the NIMs at the same level. On the asset quality, yes, we have a full-fledged team. We have separate collection teams for each vertical individually, and these teams focus continuously only on collection, unlike some other industry players where sales and collections are merged. So they have their own reasons, but we find that at the cost of a slightly higher OPEX, it makes sense to keep separate teams focusing on that. And we have a high amount of data analytics, supporting them to make this happen.
Mr. Selvan, on the NIMS part, you're saying that you're hoping to maintain NIMS at around 7.8%. That's a reasonable expectation to have for the year as a whole?
Yeah, I think we can keep it for the coming year, unless something new happens. As you know, there are always new surprises or shocks that could come. But given current scenario, as this situation continues, yes, it should. And if RBI comes with reduction, then it should improve, frankly.
Then it can get better. Yeah, who knows? If we start getting those rate cuts. The reason I was asking was that I was looking at the overall credit data. RBI put out the FY24 data. And that break that they, put on NBFCs in terms of just credit offtake, that is really showing up. System as a whole, from 30% credit growth to the NBFC sector, it came down to just 15%. So, just tell us a little more about how you're managing to keep cost of funds low, and what is, what are your borrowings looking like, and how is the overall market? You're of course a top-notch NBFC, but just some more color on borrowing and what's going on in the market.
See, what also happens is a large part of our borrowing across the businesses is priority sector, focused. We do more, almost 85% of our branches are in the rural, and this caters to both the rural, which is required by banks. So we do a lot of securitization of priority sector assets. Even our borrowings are linked to priority sector on lending. So there we are able to negotiate tighter tighter cost of fund rates with them. So that helps us in containing our cost of fund. Actually, we don't play too much on the CPs. So that is why actually we were not impacted when CP rates went up over the last 2 quarters. So we keep our CPs at around less than 3-4% of the overall book, and so that we don't get impacted by the wild fluctuations out there. So these are our primary focus, and wherever we do, even when we did ECBs, when we our fully hedged cost is even lower than the bank borrowing cost. We try to target that way and take a longer negotiation time frame to get the rates right.
So just one more point, since we're discussing, cost of funds. In general, the only issue that perhaps you can say is, a bit of a, gray area was the cost to income ratio moving higher. It actually moved up quite a bit. So, is that a one-off? Can you give us some guidance on the cost to income ratio that you're hoping to maintain?
That is, as I was saying, primarily driven by the OPEX going up. We spoke about that. So that is what is driving the cost to income ratio. So it will, sort of even out as we move into the next year. But our cost ratios will tend to be higher. That's part of the way we operate, and that is a trade-off between the cost and the credit. Now, whether we reduce cost here and then increase credit cost, or reduce, spend a little bit more to pursue good credit quality, so that we make sure that credit remains absolutely, industry best.
Got it. So just one last question from my side, Mr. Selvan. On the sort of consumer and the CSEL segment, your delinquencies earlier there were kind of driven by this partnership with fintechs, etc. You kind of slowed down that substantially. Could you give us a sense of what happened in this quarter? What's going to look like in 25?
Yeah, see, as we spoke earlier, the CSL business has got two parts. One is the traditional business, which is focused where we ourselves go meet the customers. It's not like an app driven, etc. We meet the customer, we have a touch and feel of the business and lend to them basis our experience or interactions with them. So that business will continue to grow, and it is growing well, and it is also having a reasonably good, credit quality out there. The fintech businesses, we had a few instances of, bad experience with some of the partners we entered into. We exited them. That happened even in Q3 itself. So that is, but we have also been watchful of that, and we are trying to keep a little low profile on the fintech businesses. On the parallel, we have started our own app so that we could do our own business through the app for such similar customers, while we will pursue this fintech business with other partners where we have good experience.
Okay, very quickly, sir, your gross NPAs are around 3.5%, net NPAs are around 2.3%, multi-quarter good numbers out here. What should the guidance be? I wanted a number.
I would keep it at that level while we'll endeavor to move it to better numbers. But I think what will happen is in Q1 it will slip a bit. It happens every time, if you go pre-COVID. But this is my guess. But of course, the teams will endeavor to keep it at the same level, if not better it. But generally in Q1 it tends to slip a bit because there's a lot of push in Q4 to bring this down. But then we'll be better than this as we close the year next year.
Okay, thanks a lot, Mr. Selvan, for joining in. You're sounding quite positive about the outlook. The stock is up close to around 4%. Congratulations on FY24. Looking forward to the numbers you've given us for FY25. We slip into a short break. You come back, we get chatting with the management of Bajaj Auto.
Co-presented by
Welcome back. Well, as far as the market goes, it's kind of holding up quite nicely, 40 points higher on the Nifty. Mid-cap index is up just under 0.2% as well. So choppy start, but on the green side at least for now. Let's keep it to corporate conversations. And you just saw those numbers from Bajaj Auto, and they're looking very good for the month gone by, for the month of April. We've got about a 17% increase in total sales coming through for Bajaj Auto. Rakesh Sharma, Executive Director of the company, is with us to give us some more cues. Mr. Sharma, great to have you on as always. So very strong start to the year, 17%. And the good thing is that even the export numbers, they continue to look better and better. So just, talk us through what the expectations are from the export side. Let's say first half, or even if you talk about the first quarter of the year, what kind of export recovery are you projecting at the moment?
Good morning. Yes, it's a rousing start to the year, particularly in domestic markets, aided by a convergence of festive and marriage dates in April. So we've got the full benefit of that, and I think we've grown faster than the industry. Exports is continuing to sort of hold at similar levels as of last few months. But if one sort of peels the onion a bit, it's only one market now which is dampening the recovery, and almost all overseas markets are on the recovery path, on the growth path, albeit it's a base effect we are talking about, but be that as it may, it's Nigeria which is still sort of struggling with finding its equilibrium on the currency side, which is having a very dampening effect on retails over there. So apart from that, and that's a very, very large constituent for us. It's our largest market, and we've got a very high market share over there. So apart from that, I think the recovery is well underway. But if I put Nigeria and the rest of the markets together, I would say in the short term, we should see a similar level of performance. The real jump will come once Nigeria stabilizes.
Nigeria picks up. Got it. So we'll watch out for that. On the domestic side, Mr. Sharma, I think you also pushed through a price hike in April, right? How much was the price hike? Because that's been digested really well. Despite that hike, the total domestic sales are now almost touching that 2.5 lakh units mark every month. Do you think the market has more elasticity for further hikes? And what's the kind of, monthly run rate you're confident of, domestic sales?
Well, the price hike was just to, offset some of the minor cost increases we were anticipating. It was not significant. It was, in the range of 1 to 2%. It was more internally driven rather than trying to test the market for its acceptability of the price. We wanted to sort of ensure that our margin profile is ahead of any cost increases on the curve. So it was for that reason. I think to understand the underlying performance of the industry, one has to look at March and April together, because April was unnaturally high. And even when one does that, the industry is bringing in a very good performance. It is driven again by the top half of the industry, which is growing at a slightly faster rate than the bottom half. And we are continuing to lead in the top half by a fair margin. I expect the industry should continue its growth, but it may not be at this level, because we find that May and June will be slightly low months. But I think we will continue to outpace the industry, particularly in the top half, by about 2 to 3 times. So I would say in the domestic business, we should again see a similar performance as in April, in May.
Okay, got that. Some of your competitors are also reporting good numbers in that top half that you're talking about, 125cc and plus, and even the higher variants, 400cc plus. So given that the top side of the market is really sort of invigorated, what's the kind of market share gain that you're hoping for this year?
Well, we are wanting leadership. We are a tad below the leader. But I must point out, when we started the last financial year, we were 10 percentage points away from leadership in the top half. We are now 1% point away. And of course, we will be thrusting to ensure that we get to the number 1 spot in the top half. And we've got a great lineup of products beginning tomorrow, when we launch our biggest Pulsar, which again will not only bring in some volumes in the top segment, but I think will be a very good adrenaline boost to the brand, in Pulsar brand in general.
So final question, going back to pricing, Mr. Sharma. I mean, since the market seems buoyant, new launches are happening, volumes are looking good, aren't you thinking of testing the market, pushing the market a bit on pricing?
See, the pricing is also an outcome of various competitive positions which have to be taken into account. We are not seeing any internal triggers for that. But if there is an opportunity, that we are very, very bottom line focused as well. And we will continue to evaluate those opportunities. But there are no great internal triggers. There seems to be competitive equilibrium. So let's see if there is a spot here or there, we will examine it.
All right, Mr. Sharma, lovely speaking with you as always. Thank you very much for your time and a good conversation. Good luck, sir. Thank you. Well, that's Bajaj Auto with the numbers which have come through. So we'll continue to outpace the industry. That's the message which is coming through. Stocks, of course, done phenomenally well. Castrol India is the next one, which is on our radar. I can say it was perhaps operationally a bit subdued. This, of course, follow the calendar year. Margins contracted a little bit. Profits actually declined. Management said that there was some softness in consumer demand as such. Mr. Sandeep Sangwan is Managing Director of the company. He is joining us right now to take some questions. Mr. Sangwan, good morning. Good to have you with us here. Prashant this side. Could you characterize that softness that you alluded to in consumer demand? How do you see that? Do you sort of see... let's talk numbers. What was volume growth for you in Q1? Last year volume growth was about 4% for the full year. What are you expecting for the full year 2024? Go on, sir.
So, morning, Prashant. First of all, thanks for having me on your channel. And I think the start to the quarter was a bit slow in Jan, but I think things have picked up in Feb and March. So if I look at the quarter, we're pretty confident of the results in terms of the volume growth was about 6%, 5-6%. And we introduced portfolios in the lower end of product range, which is giving us good volume growth. I think the revenue was up 2%, primarily due to a bit of a mix, but we were able to hold our margins at 22%, EBITDA margins. That's what we've been saying, that we'll operate in a range of about 22 to 25%. But I think in addition to that, we're laying strong foundation. Last quarter, we announced our brand ambassadorship with Shah Rukh Khan, who's the ultimate in terms of excellence, performance excellence. We also announced our tie-ups with Mumbai Indians and on the performance side with KTM Cup. We've been doing a lot of activity on CVO, which is Pragati Ki Pathshala, where we've kind of interacted with about 10,000 truck drivers in the first quarter. And we continue extending our reach into rural India. We reach about 33,500 outlets now, and also in multi-brand workshops. So I think I'm confident of the growth coming through. We saw volume growth coming in quarter one. And we're also investing behind our brand, so all to play for.
So for the full year, you'd be in this 5 to 6% range, volume growth?
So our view is that the category would grow at about 5 odd %. And I think we want to be, as we've said, we want to be ahead of category growth by a few points. So as I said, all to play for, the category is growing. The softness I spoke about was primarily coming from the agri sector, where we saw a bit of slowdown. Okay. Two-wheelers are doing well, passenger cars are doing well, and even on commercial vehicles, the specialities range is doing fine, sir.
Okay. All right. Hi, Sandeep. Good morning and good to see you. And, so the industry grows at 5%. Will you grow at around 1.5 times what the industry is growing? 1.4, 1.5 times?
I can only talk about aspiration. What will we grow at?
So what do you aspire to grow by?
Yeah, we aspire to grow by, as I said, a few points above the industry.
Okay. Got it. You put in some promotional efforts as well, but still this top line growth is only around 2%. Is it an aspiration that your revenue as well could grow in double digits at some point of time?
Yeah, I think we are, as you would know, historically, Castrol's volume growth has been about 2%, 1 to 2%. We're trying to change that trajectory, okay? And as we change that trajectory, we're also learning to play the mixed game, both at the top and at the bottom end, while protecting our margins. So I think there'll be a bit of balancing in the portfolio, but hopefully in another few quarters, I think we'll get it the mix right, and push for similar kind of margin growth as we introduce new products on top end of the range. So we have exciting launches planned in the second half. In passenger car segment, we are upgrading the technical specifications on our two-wheeler product portfolio. So a lot to look for.
Okay, so at some point of time in this year itself, maybe the revenue growth as well could be in double digits?
I wouldn't say double digits because the category grows in mid-single digits. Okay. So that's what you need to...
Since you're emphasizing, Sandeep, about that you'll outgrow the industry, you could have gained some market share, right? So you want to put a number to that? What is your market share? Where do you see it going?
So our market share, as reported in the retail automotive aftermarket by Nielsen, that is what we measure, is about 21%. And I think it's been at that level. We've gained in a few segments, and we've seen a few basis points drop in one of the segments. So overall, we're still holding at about 21%. Okay, and as we progress, we'll see how it pans out.
I mean, India is one of the few parts, important large markets in the world where there is still, according to many reports, visibility for the next 10, 15 years, right? Maybe more. Till electrification, etc., takes hold in a big way. But at the margin is competition also, because India is one of the few markets with that potential. And I think I've asked you this before as well. Lots of new, not newer players, but a lot of focus. Large players in the lubes market outside focusing here in a big way, pushing through. Is that hurting at the margin? Would you say?
Prashant, I think you need to look at it two ways. So first of all, as you rightly said, India is going to be the last man standing as far as the lubricants category is concerned, given the long runway we have. And our projections show similar to what you said. I think the competitive intensity will increase. But please keep in mind at the same time, as the technology improves, consumers and vehicles demand better and better products. And that gives the margin upside as we introduce new technology products. And the market will evolve. So I think that will balance out some of the margin questions that you're asking. The competitive intensity, we are very comfortable dealing with that. We've seen a lot of competitive intensity. It will increase, but I think in the end, it will be good for customers and consumers to get better quality products at the right value.
Okay. All right. You also launched Castrol EV Fluids. What has been the response out there? What is the revenue contribution? And obviously, it will be growing from here on. So what's the target, say, in the next 2-3 years?
So I think we'll see if you look at the EV sales, primarily on passenger cars, they're growing at a quite good clip, but the volumes are still very, very small. Okay, we talk hundreds of thousands of liters. So it's not kind of selling EV fluids in million, but we supply to two of the biggest OEMs who manufacture EV vehicles in India in the car segment. Okay. Good relationship with both the OEMs. So we'll see that business scale up, but I think it'll take another 5-6 years before it becomes of any material scale.
Okay. You know, in the annual report, you also mentioned that data centers could be a big opportunity. You want to throw some light on that?
Yeah, so absolutely. We've called out globally, Castrol has called out data center thermal management is one of the places where we want to participate. And in fact, we've set up a R&D center in UK, which is our global headquarters, where Castrol BP is investing about 50 million pounds in that facility. We have proof of concepts, and we're working with some of the data center players now in terms of bringing that technology to commercial use from a proof of concept perspective, which is about immersion cooling. As data centers will become huge consumers of energy in the future, and they'll need that efficiency for processors to operate at much higher speeds and capacities.
All right, we'll leave it there. Mr. Sangwan, great to have you with us here. Thanks very much for joining us, and it's a pleasure speaking with you. Five-Star Business is the next company which is on our radar. Fourth quarter was strong. Loan growth is robust. Business momentum was strong, while asset quality was also under control. Mr. Lakshmi Pati Deendayal is Chairman and Managing Director at Five-Star Business. So good morning. Great to have you with us here as we do every quarter. You know, let's just start by, why don't you sort of characterize what the business environment was like? Because, you know, two companies now that we've spoken with have kind of called out a little bit of weakness overall in demand. We had a cement company early on. We had a company which is Castrol calling out a little bit of softness in consumer demand. Now, of course, different industries. You are very much focused on the very small business loan segment, and you kind of said that, you know, this is the segment which gets affected the last in any kind of upheaval or slowdown, etc. So just start there, sir. What was the environment like, and call out the rest of the year for us, FY25.
Yeah, thank you for this, Prashant. Let me again reiterate what Five-Star is. We are not a general vehicle loan lender. We are lending to a niche segment where the formal finance people would have not lent or would have lent lesser. So that is a niche that Five-Star is catering today. The small business shopkeepers and self-employed of this country, they are predominantly depend upon the local money lenders for any credit needs for their housing or business needs. That's where Five-Star steps in, and we move these customers from informal to formal. So I don't see any kind of weakness, both in loan growth and as well as from the collections perspective. The outlook is very strong. Post-COVID, especially post-COVID, we have been giving a growth of above 30%. The same growth of above 30% will continue.
All right. Good morning, sir, and good to see you in. Nigel on this side. So that 30% growth, if you can split it up for us, I think your rough ticket is around 3.5 lakh approximately. Will there be any increase in the ticket size? Will it be volume driven? If you could give us some clarity on the 30% growth. And also the cost of funds. How is it impacting you? What's the guidance on the NIMs? Because you were changing your borrowing mix as well. Please go ahead.
Yeah, that's a good point. I wanted to clarify on the cost of funds and the mix that what Festar is today looking at. If you notice our presentation, we have given a very strong indication that one domestic financial institution and one foreign financial institutions have invested in our debt, both close to one 450 crores, another 500 crores. So this gives a very, very strong signal that even though the liquidity is getting tightened, people lending to the segment indirectly through Festar is picking up very strongly. And our cost of borrowing on the book is sliding down. We were at 9.7%. It is at 9.7% for the full year. And our incremental cost of borrowing also, it's at the same level of 9.7%. This is from the liability side. From the average ticket size, we intend to stay on with the same profile of customers. And our ticket size was, even pre-COVID, our ticket size was around 3.5 lakhs. We tend to stay at 3.5 lakhs. And maybe we will moderate upside, keeping the inflation in mind.
Okay. So going by you're saying on the cost of borrowings as well as the changing, NIM should hold in that vicinity of around 17.1%. Is that correct? Or is there an upside risk out there?
No. Please see Festar not as a general NBFC because we are a bit overcapitalized. We have been guiding very clearly to the market that our NIMs today is at 17% plus. That's not going to be sustainable. The NIMs will see moderate slowdown because we keep borrowing more from the market for our above 30% growth. So the NIMs at the steady state, maybe 2 years, 3 years down the line, will be around 15-16%.
Got it.
15 to 16%. Okay. So speaking of capital, our colleague Abhishek points out that while, of course, the growth has been absolutely phenomenal, you've also been consuming a lot of capital. So the CRAR, that ratio has come down from the highs of the mid-70s a couple of years ago to, I think in this quarter, it's down to about 50.5%. So is there a certain level that you're comfortable with? Would you look to shore this up again? Or are you comfortable at 50%?
No. I think there are two things which is happening hand in hand. One is the growth is very strong. As you keep borrowing, your capital has to come down. That's been coming down steadily. During our IPO, we were at less than a one-time leverage. Today, our leverage is at 2.25 times. So that shows how our strong leverage is picking up. And that will be shown on return on equity, which is touching 18% for this quarter. And for the full year, it is around 17.6%. So that's quite impressive. That comes from your lowering your capital and you're borrowing from the market. Second is on the recent circulars of RBI, keeping the end use into account, they have raised the capital adequacy for the certain end users. Festar's end use goes towards business, housing, and some personal needs of our customers. For the personal needs, we have raised our capital adequacy from 100 to 125%. That's where the capital is dropping down from 50 to around 52%.
Okay, we'll leave it there, Mr. Deendayal. Thanks very much for joining us. Good to speak with you. And just one last point. Return on equity, I think when we've spoken last, you'd given a slightly longer range guidance that you said would be about 20%, right? That still holds?
Yeah. In next 3 years, we'll be at 20% plus. That holds very solid.
All right. Thank you very much, sir. Good speaking with you. Appreciate it. That's Festar Business, and 30% growth like clockwork is what they're saying they'd be able to do. And, demand, etc. remains very buoyant. Generally, a pretty solid set of numbers. Mitesh is back with us to take stock of what's happening out there in the market. We are up 50 points. So the start, for very briefly, was slightly in the red. And then there was a sort of sharp bounce, which we saw. And it kind of leaves us where we are. Lots of interesting moves. Market breadth is positive. So, Mitesh, come in on the index if there are any trades and specific stocks. Mitesh, I think you're on mute.
Now it's audible?
Audible. Go on.
So on the index, still not a trade, because while the hourly candle is good, we are just retracing the candle which we made on Tuesday. So still not sure of a big up move starting. But I think, yeah, as you rightly said, a lot of stocks showing promise. So I have Canfin Home Finance, Canfin Home, which is a buy with a stop below 770 for targets of 820 on the upside. And Crompton, we've seen Havells and the other AC makers do very well, Voltas and Havells. So I think Crompton is giving a good breakout today. Buy here with a stop at 320 for a target of around 340.
Mitesh, just very quickly, the pressure is again showing up on Kotak Mahindra Bank. It's down 3.5%. What are the next levels you're looking at?
Survi, I think I was hoping that, around 1650, we'll see some kind of consolidation if the decline can be arrested. But I think the bad news and the negative news flow continues. And therefore, the stock is heading lower. While there's some minor support around 1500, there's a weekly historical pivot around 1450 mark. So my understanding is that maybe we'll hit 1450 sometime during this expiry.
Okay, all right, Mitesh, thanks very much. We'll leave it there for now. Touch base with you a little later in the morning. For now, we have to take a very quick break. We'll come back on the other side with the latest action in the commodity markets. Manisha will be with us.
आत्मनिर्भर भारत।
Welcome back. Well, the equity market's holding up quite okay. Let's figure out what's happening in commodities. We have Manisha in the house now. Manisha, good morning once again. So what's happening out there?
Well, the crude oil prices after trading in a very stiff range for a very long time seems to be breaking out of that. We've seen 3% of decline in crude oil prices overnight. And for the last 1 month, we've seen prices decline by 8%. And from 2024 highs, we're down by nearly 9% for the crude oil prices. There is a very slight uptick right now in crude prices, but markets do believe that you could be looking at lower lows, especially for the next week or so. The US Fed meeting, for one, has indicated no rate cuts anytime soon. That has led to support in dollar index, and that's weighing on various commodities, including the crude oil prices. The bearishness in crude also comes in from the fact that the EIA suggested or has posted US inventories up by 7.3 million barrels. Markets were expecting a withdrawal of 2.3. So you have a surprise and much on the higher side. So right now, the US inventories stand at 460.9 million barrels, which is, by the way, the highest that you've seen since the month of June 2023. The US crude output also has been surging on the higher side. When you look at the numbers from Jan, Feb, March, and then April, we seem to be trading very close to those record highs. So 13.15 million barrels per day in the month of Feb as well, and March and April promise to be on the higher side. Also, when you look at the refinery utilization, well, that has seen a bit of a decline at 87.5%. We also have seen the distillate and gasoline inventories continue to gain. So that tells you that the physical demand for fuels within US also seems to be not very strong. The premium also, because of the easing geopolitical tensions, has weighed onto the prices here. There is yet another conversation in Egypt this time for ceasefire between Israel and Hamas, and that's taken that war premium off the prices. Markets also have seen the Israel and Hamas premium come off. There is nothing that we've seen as in developing between Iran and Israel as well, and that seems to be weighing on. This is the latest number that Stanchart and EIA have put out in sense of demand estimates going forward. So if April was 101 million barrels per day, May seems higher, and June even higher, is the reason that you have Citi and Bank of America, everybody telling you that this is the quarter you could be looking at the Brent crude prices crossing 90 on the higher side, 94, 95, 98 are the targets coming in, purely because of this reason that the supplies may not be so strong and the demand definitely picking up. This is what we've done in sense of prices. So Jan, we started Brent with 75. We saw a high in the month of April at $91, but currently trading at 83. So we have seen prices actually come off quite strongly from the highs of this year, with markets anticipating that if 82 breaks, then we are going back to where we started this year, around 75.8, but that could be very, very volatile crude prices.
All right, Manisha, thank you very much for that. So interesting list of commodities which are making news. Oil, of course, top of the list. More downside, perhaps we'll see. Now, Godrej Properties is the one that we want to focus back on. Sonal is here with details. And Sonal, under pressure a little bit. Go on.
Oh, yes, it is. Because there was a lot of deliberations ahead of this restructuring as well about the Vikhroli land. But now there is some finality on this as well. So CLSA has written a note on the stock. They have a sell rating with a target price of 2,100 rupees per share. They say restructuring lends some clarity on Vikhroli now because the Vikhroli land will entirely be owned by Godrej and Boys and Godrej Properties. That company will be the development manager for the land right now. Now, as I said, there has been a lot of speculation around this land, whether it will be owned by Godrej Properties, what happens when restructuring happens, because it's a prime land with 3,000 acres of volumes as well. This is between Godrej and Boys and Godrej Properties. Now, the announced restructuring, according to CLSA, puts this to rest and rules out any potential option value to Godrej Properties. And that is why the stock is under pressure. This could have emerged from the Vikhroli land if the restructuring was done in a different way. In their estimates and SOTP valuation, they have considered Godrej Properties as a development manager for the Vikhroli land, and that's why there is no change in their recommendation or their target price as well. The stock is under pressure because maybe the street wanted some more with respect to the Vikhroli land, but that hasn't come about.
Okay, thanks Sonal for explaining that to us simply. That's the reason why Godrej Properties is under some pressure. Rima joins us to tell us about NetWeb Tech. Rima?
Well, it's a strong Q4 by NetWeb Tech. The stock is up 5%. Year to date, the stock has given a 50% return. And if you remember, the issue price was just 500. So from that level, the stock has more than tripled. On the numbers, 5% jump quarter on quarter. On a year-on-year basis, the revenues have more than doubled this time, 115% up. EBITDA margins too consequently have expanded QOQ, and even on a year-on-year basis, margins are up 300 basis points, driving the best ever quarterly profit number for the company at 29.6 crore. The company has also said that AI systems revenue contribution is going up. It's gone up 2.6x in FY24. It now contributes 11% to the overall revenue versus 7%. Even the order book of the company has jumped up substantially. Now, as of March, it stands at 411 crore, which compares with 71 crore, same time last year. So, all round, these look like good set of numbers. But as I said, the stock has anyway been a big mover. Back to you.
Okay, all right. Rima got that. Thank you very much. So 5% circuit on NetWeb. After those numbers, we'll take a break. Come back on the other side. And Dinesh Agrawal, CEO at India Mart, is going to join in, talk about the company's fourth quarter performance.
Go. Welcome back. Well, let's focus on India Mart. The stock is up and about in today's trading session. I think it's up close to around 4%. So clearly the street liked what they saw in terms of their numbers. Mr. Dinesh Agrawal, the CEO of India Mart, joins us on the show. Hi, Mr. Agrawal. Good morning and good to see you in. Well, give us a couple of details. Earlier I was trying to push you with regard to the margins. And you said maybe they'll start moving towards around 30%. You managed to get them to around 28% as of the last quarter. What is the outlook on that front? And also, if you could tell us what kind of subscriber addition you're looking at. That's still quite mediocre at around 2,700. Please go ahead.
On the EBITDA margin, I have guided you on the standalone EBITDA margin. And I think on the standalone side, we are about 30% there. And we would like to maintain that 30% run rate going forward from here. On the consolidated basis, because there are other businesses where we are investing, so you are seeing 28% EBITDA margin. On the customer front, as I said, last quarter was probably the lowest. And from there, last quarter was 2,000 and now we have 2,700. We are showing some recovery and still not as per the mark. And we are continuing to work on the subscriber addition and churn in the lower buckets of the silver monthly and silver annual. And hopefully in the next quarter or two, we should be able to get back to our natural level of 5,000-6,000 customers in 2-3 quarters.
Oh, okay. 5,000-6,000 customers, huh? That's a quarterly run rate. By when do you think you'll manage that? Because you're at about 2,600 in Q4. When do you touch 5,000?
I'm planning to target that by Q2.
Okay.
Mr. Agrawal, hi, good morning. So 5,000 by the second quarter. How will it happen, sir? If you can give us a sense, what's the strategy that you sort of employ?
So Two things. One, as you remember, we last year increased the prices and it took some more time than usual it takes to absorb the prices. So gross additions have been slightly lower by 1,000 or so. That we are trying to recover, and we are on path of recovery on that side. As well as we have taken certain measures to control the churn. And I believe the results will start coming in over the next 6 months, and that should do the numbers.
So nothing on pricing per se. You're saying that it'll get absorbed and naturally it'll pick up. That's the...
It has already gone absorbed. I think the gross additions have come closer to the what it was pre-price hike.
Okay. All right. I wanted to ask you about collections. Are you seeing any kind of upgrade of customers, from silver to gold and platinum? Because I think that's the key trigger, right? Could you tell us how that is likely to pan out going ahead?
So effectively, if you see last entire year, our revenue or collection growth has come from the increase in the ARPU. And that ARPU has come up mainly from silver to gold and gold to platinum upgrade, as well as some realization increase. So if you see constantly for the last 4 or 5 quarters, we have been able to maintain upwards of 10% ARPU increase. And that is coming because people are upgrading, people are seeing value in the product. And there are also some changes that we have done to increase the prices on the gold and platinum side.
Okay, so we're looking at more, are you looking at pushing through more price hikes? And that brings me to the overall question. For the year as a whole, if I talk about FY24, then growth came down quite a bit compared to the previous year. From 31% growth, you came down to 21% growth. But now that you're talking about, higher number of customers and maybe some of these price tweaks, what are we expecting in terms of top line growth this year?
So revenue from operation, as I said, is a function of collections that we have done in the previous years. So if you see the previous years, collections were much higher, and that was reflected in the revenue from operations last year. And also, if you see last 2 quarters, our collections have been growing only at 16-17%, while the revenue was at 21% or 17% now. So I think since we have had a muted last couple of quarters on the collection as well as on the paying supplier front, you can see some pressure on the revenue. But as we improve the collections, revenue should also improve going forward.
So can you go back to the 20% plus mid-20s kind of growth that you saw in collections in the first half of 24?
Yeah, I think for the entire year, I can definitely, I'm targeting to upwards of 20% growth in the collections. And that should reflect in the revenue going forward, maybe after 2 quarters.
Just one question. Would you have to sort of undertake more spending on the tech side to kind of revamp the platform, etc.? Will that be a kind of a added thing, or is that already kind of factored in with some of the numbers that you gave us on margins?
Yeah, it is already factored in because if you see in FY23, we have increased the headcount as well as the product and technology cost by huge margin. And results of those are still awaited. We have been working on tweaks. I don't think we are going to add many more people or many more technology spend over the next 6-9 months. So the margins, we are pretty confident that we should be able to maintain a 30% margin on the standalone side.
All right, Mr. Agarwal, final question then before we let you go. You're at around 214,000 paid subscribers. Going by what you're saying, you'll be satisfied if you exit the year at around 235,000. That's doable, right?
I have not done that calculation, but if you have
mathematically, I'm just saying in this quarter, say it stays a little bit subdued of around 3,000 odd. And the next 3 quarters, you do 5.5 to 6,000. So that will be an addition of 20,000, more than 20,000 for the year. So 235,000 should be a gettable number.
For the entire year, I'm actually targeting about 20,000. Yeah.
Got it. And final question with regard to the cash in your books, could you tell us what it is? And you've done some good inorganic growth actually. For the time being, margins are a little bit under pressure. But do you want to do some more inorganic growth, or is there a shareholders reward coming out?
So we have already declared a dividend of 20 rupees per share on top of the bonus that we given last year. So there's a dividend which is being declared right now. Last year we did around September, October, we did buyback of about 500 crores. So nothing on the cards in terms of the buyback or any extraordinary dividend as of now. As and when things fold out over the next 6-9 months, whether we get any good inorganic opportunity to deploy funds or not, will decide the future course of action.
All right, Dinesh, thanks very much. Good speaking with you. Appreciate you joining in. So upwards of 20% revenue growth, margins of 30% in that range. That's the sort of forecast as far as this chat is concerned. Good luck. Thanks indeed. Now, REC is surging. It's up 9%. So that basically makes it almost 20% in 2 days flat. After Friday's 10%, after that's Tuesday's 10% surge as well. Earnings came through, and I mean, we had the opportunity, my colleague had the opportunity to actually speak with them. Numbers were strong. This is, of course, a quick chit-chat with the company's chairman and managing director, Mr. V.K. Devangan, on REC's upcoming renewable energy commitments. Listen in.
Our renewable energies portfolio, the sanction was increased by 533% in the last financial year, from 21,554 crore to 1,36,516 crore. But since renewable energy is intermittent in nature, we need to have a storage solution. The storage solution could be either pump storage hydro projects or battery energy storage projects. Till the time we have cost-effective storage solutions available, we'll have to depend on coal-based thermal power plant, which provide us the base load. It is a very ambitious plan to provide rooftop solar to about 1 crore household, and this we are targeting at the earliest. We have to install about 30 to 40 gigawatt capacity, including all the government buildings also. But Pradhan Mantri Surya Ghar Muft Bijli Yojana is targeted to cover 1 crore rooftop solar. Most of the operating assets, which were assets, they are in the process of resolution, and we are quite hopeful that we'll be able to resolve those stress assets, and all will become net zero NPA company by the end of this financial year. We had this Lanco Market project got resolved. We got some write back, or 265 crore write back we got from Lanco Market project.
Okay, all right. That's the stock of the moment, though. REC is seeing some follow-through buying as well. For the time being, we'll wrap up on this show. You stay with us. We've got a couple of managements waiting for you on Chartbusters.
Co-powered by State Bank of India, the banker to every Indian.